Assalamu alaikum. Welcome to the first lecture of ATX, and the topic is income tax computation for June 2023 to March 2024. Now, this is basically like revision of your income tax from taxation plus some additional things which is not covered in taxation. So, before you start this lecture, make sure that you have the latest textbook as well as the revision kit, that is financial at 2022. And if you don't have the hard copy or the soft copy with you, I have the soft copy with me. All you need to do is you need to go to my channel about section and scroll down from ACCA material. You can download the textbook and the kit of ATX. Now, so this lecture is going to be mix of discussion as well as calculations. So we are going to do lots of calculations here, which will make this lecture pretty long. But don't worry, since most of the things you have covered in your taxation, this is going to be pretty much easy for you. Okay, so take it like continuing from taxation. Okay, it is not something that you think that it's completely different or nothing like that. In fact, what are the tax rates that you've studied in taxation is the same for ATX. So here we are going to focus on income tax computation. You should know the Proforma and all. And the Proforma is same that you have studied in taxation. In my lecture 1 of taxation, I have given all the income tax rate. But don't worry, I'm going to repeat it for ATX as well. Because in case some of you might have given taxation way long before, you must have forgot the rules. Don't worry, I'm going to repeat it in ATX. Personal allowance. You must have heard of personal allowance. These are some deductions that are allowed from your income. Okay, and it's fixed. We'll see this year what is the personal allowance. Taxation of families. In UK, you could be taxed individually or families. And income tax planning scenarios. This planning scenarios will be for all types of tax, income tax, CTD tax, inheritance tax, VAT. Okay, because in ATX you need planning scenarios. So coming to your taxable income, these are your sources of taxable income. I'm sure you must have covered it from your taxation. It's just a repetition, like your property income, overseas income, employment income, individual, trading income, savings income, other taxable income, and all these are liable to income tax based on FA 2022, that is 2022 and 2023. This is the tax year. Less any allowable deductions. So all these allowable deductions we are going to study in this lecture. What is the basis of assessment? All your income is taxed on a tax year. Okay. And for June 2023, which is already gone, but we still have 3 more sittings. September 2023, December 2023, and March 2024 examinations are based on this tax year, that is 2022-23, which starts from 6th April 2024 to 5 April 2023. Individual taxpayers, whether they're married or single, are taxed separately on their own taxable income. It's like husband and wife having their own incomes. They will not be taxed together. Husband will be taxed separately, wife will be taxed separately. Okay. So taxable income. Okay. You have to classify all your income into groups and then you apply the rates of income tax, which is given in a Proforma. So this Proforma, you need to remember it. You have studied it in taxation. This is just a repetition. Okay. So you start with name of individual, Then you have to write that it's an income tax computation because we don't know what type of tax you are calculating. You have to specify that it's income tax and the year. Very important in taxes year. So first your earned income. Under earned income comes your employment if you are an employee, your trading profit if you are an employer, other earned income maybe from other sources. Note that we have note. Okay, there is a note to each of this. Notes 1. So later we are going to discover what it means. Okay, this notes we are going to go through it later after we finish this Proforma. After this we have savings income. So first is earned income. This earned income is also known as non-savings income. Okay, you must have heard it in taxation. First, you always write non-savings and then savings income and then dividends. Okay, so under savings income we have interest received which is gross. Note 2. And interest received net. Yes, some we receive gross, some we receive net. We have covered this in taxation. What are the things we receive in gross and net? In fact, most of the things we cover in it's in gross only, except few which are in net. Okay, so if it's net, you see you have to multiply it by 100 divided by 80. Why? Because basic tax rate is deducted. Basic tax rate is 20%. That's why it's 80. We have a note for that as well. Then we add, so under, then we have investment income. Okay, property income, other types of investment income. Then we have dividend income. Dividend received from UK companies, other dividends. Then add all together total income. Once you have your total income, all kind of reliefs you deduct. Okay, there are two reliefs. One is qualifying loan interest. You pay this amount in gross. We are going to study in ATX what is qualifying loan interest. This was not there in your taxation, by the way. And loss relief. Loss relief you must have covered in taxation. Various types of loss reliefs. Okay. Then net income. Then from net income, see, it's not from your total income that you deduct personal allowance. It is from your net income that you deduct your personal allowance and it's fixed. You can sometimes transfer this personal allowance also to your spouse. For that, we have another type of allowance known as marriage allowance. You must have studied this in taxation. It's the same. So then it's known as taxable income. And remember, you charge tax on taxable income, not on total income, not on net income. Okay. So after that, at various rates, you calculate income tax. First, and yes, if there is any marriage allowance, let's say you want to transfer some of your personal allowance to your spouse, you have to deduct it. And there are some other allowance deductions like investments. Okay, three types of investments. You can say reliefs are given: EIS, SEIS, and VCT. We are going to go through this three as well later on. So EIS scheme is 30%, SEIS is 50%, and VCT is 30%. Okay. For VCT and EIS as the same rate, 30%. SCIS is 50%, it's more because it's for farmers, agriculture workers. Okay. Now, double taxation relief, if you have any, you deduct it. Double taxation relief comes when you're doing foreign investments and all, when you're dealing with your foreign client and let's say you're selling and buying abroad. Okay, so because there are different tax rates there and in your country, due to the differences in tax that you have to pay, we have a treaty known as double taxation treaty or double taxation relief. This double taxation relief is not tested in taxation. I've just covered it in lecture 1. I've just uploaded in fact taxation previously before this. You can go and check it under my taxation lecture. But for ATX, you will be tested on double taxation relief. Then income tax liability. Any tax credit we reduce. Payee is one of the tax credit. Then income tax payable by self-assessment. So this is your Proforma. Remember that in taxable income, all income is gross. Any exempt income is excluded. There are some incomes you should know they are excluded in taxation. I've taught. Okay, they are excluded. You do not include them in the income table to calculate tax. These are some of the exempt income. In taxation, the it's wider list is there. But in ATX, because we are assuming that you already know of taxation, so we are limiting it to few because it's just a revision. So exempt income like your income from individual savings account, NSI savings, interest on repayment of tax, statutory redundancy payment, scholarship income, anything you get of scholarship is exempt, and anything you get through lottery or winning something or premium bond winnings are exempt income. And anything to do with state benefit that you get, disability benefit, sickness benefit, benefit in terms of accident, is exempt. You don't pay tax on it. So I told you that there are some 12 notes. Now we are going to go into detail of those notes. First note was for other earned income. That other earned income includes these things. You can get pension from your former employment, that is taxable, state pension, from state you are getting pension, and profits from furnished holiday accommodation, other earned income. Interest received gross, note 2. This is for savings income. Okay, so for gross, these are the places where you can receive it gross. In fact, in your exam, they will tell you it's net or gross. Okay, like bank interest, gilt age security interest, NSNI bank interest, interest from quoted corporate bonds issued by UK resident company are received gross. Whereas foreign interest is net. Okay, it is gross. I'm sorry, this is gross, gross of overseas tax effort for the foreign interest. We'll definitely, when we do workings, we are going to do calculations through number. You will be able to understand this better, this theory. Third is interest received net. This is for unquoted company. See, gross was for interest from quoted bonds, okay? Net unquoted bond, just change the word. But still issued by UK resident company only. Any interest from an interest in possession trust. When we study trust later on, we are going to study this. We have a chapter called trust. We are going to cover it later. Other types of investment income, note 4. Annuity income, where you keep on getting income annually. Only the income element part only. That's an investment income. Then non-savings income from IIP trust, which will be net. 100 divided by 80 because basic rate is 20%. Then discretionary trust income. 100 divided by 55 because we are taking at the additional tax rate, that is 45%. And other foreign income, gross of overseas tax effort. These are other investment income. And as well as dividends from a real estate investment trust. We have not covered this in taxation, some of it. Even the real estate investment trust, REIT. We are going to cover it in ATX and you should know it. Okay, it is 100 divided by 80, 20%. Most of the thing, if it is net, it is taken at basic rate only. Okay, except discretionary trust income, which is taken at 45%. That's why 100 divided by 55. Other dividend income. Okay, dividend from IB trust. Here also the rate is different. This rate is fixed, by the way. They have given you the rate. That's why it's 100 divided by 91.25. So when we go through this IB trust, I will show you the calculation as well as the number. Just for now, know that dividends from that IB trust is also other dividend income, which is taxable. Foreign dividend, taxable. Then we are going from income to deductions, qualifying deductions, which we can deduct from our total income. Two things, loss relief and qualifying non-interest. We are going to cover this in this lecture. But when you're deducting it also, there's a limit. Maximum amount that you can deduct from your total income is greater of this two, 50,000 or 25% of adjusted total income, ATI. Whichever is the greater, maximum you can reduce up to that amount. So that means you cannot, your maximum amount, okay, and your minimum amount will be 50,000. Amount will not go less than 50,000 because they told greater of 50 or 25% of ATI. If 25% of ATI is more than 50,000, obviously you will take that amount. Or at least the minimum amount that your deduction could fall down is up to 50,000. It will not go below 50,000. Okay, so 50,000 is the limit. It could be 50,000 or above that 50,000. Okay. More detail on maximum restriction will be given later. Now, note 7, personal allowance. For this year, it's 12,570. But it can drop down to nil. We'll see when we go through personal allowance. Note 8. This is the rates of income tax for this year. This will be given to you on the exam. Okay. All the income tax rates will be given to you in your exam. Okay. So first, so your income level, if it falls in the first 37,700, you are in the basic rate band. And for savings and non-saving, the rate is same. Only dividend differs. So 20%, and for dividend 8.75%. It have increased, in fact, because when I did taxation, advanced taxation, back in I think 2020, I'm sorry, 2019, it was 7.5%. Now it increased to 8.75%. Coming to second band, 37,700 to 150,000. Higher rate. Okay. It is known as higher rate and it falls at 40%. But for dividend it is 33.75%. And anything above 150,000, additional rate 45%, dividend 39.35%. Now, when you're taxing income, you have to follow an order. Usually, it is advisable that you tax in this order. First non-saving, second saving, third dividend. Because there's an advantage of doing it so. And sometimes under some conditions, you can expand the band rate of basic and higher rate. Not additional. Only basic and higher rate could be expanded. How? If you are making any payment in the year, in the tax year. Gross amount, okay? For example, if you are giving anything to contributing to anything to pension, personal pension scheme if you are contributing, and if you are making any kind of donations, gift aid donations, you can extend because it reduces your total income. Okay, your total income you can reduce. So when your income reduces, for example, before you were higher rate, because of this donations you are making, income reduce and now you become a basic rate. That's why. So you can extend. But for gift aid donation, remember, donations to charity by an individual are not asked at ATS. They are not going to be there in your ATS exam. Now, we are definitely going to do calculations on each of them to understand the scenario better. Don't worry. Note 9 about marriage allowance. We told that we can transfer personal allowance to a spouse. But there is also a condition. Maximum that you can transfer is 1,260 pounds. Beyond this, you can't transfer and you don't have any law that says you can transfer less than this. It has to be this amount. 10. There are relief under certain schemes. EIS, SEIS, VCT. 30%, 50% and 30%. Then double taxation relief and treatment of overseas income. The double taxation relief only comes to the picture when you are doing a foreign investment, when you are dealing with foreign somehow. Either you are selling or you're buying from them. Because then only tax comes. If you're earning any source of income in the overseas, you have to pay tax there, then comes DTR. And most types of savings and dividend are received gross, with no income tax deducted at source. Therefore, pay payee, that is pay as you earn, is the only tax credit that will be deducted to calculate income tax payable. That means anything that you receive, automatically it will be deducted from your income and given to you. Payee. Okay. Now, rates of tax on savings. So saving is same as non-savings, 20, 40 and 45%. But what is additional in saving which is not there in non-saving is two things. One, the starting rate of tax of saving and nil rate band. This nil rate band is available only for savings and dividend, not savings. Okay, which says starting rate of tax for saving falls in 0%. Okay, if your first 5,000 of taxable income is savings, you can opt for 0%. Please understand, first 5,000 of taxable income, okay, you can apply this 0% tax there. We'll do calculations, don't worry. We'll do. To understand this rules more and more better, you have to do lots of calculations until it automatically comes to you. You know, you automatically should know, okay, this rate, this rate, this rate, this rate. It comes with practice. Okay. You must be knowing this when you come to ATX because already you have done lots in taxation. It's the same thing. No difference. So, basic rate and higher rate taxpayers, they are entitled to savings income nil rate band. Nil rate band means 0%. So the savings income nil rate band for basic rate and higher rate is this much. And for additional rate taxpayer does not get any benefit of savings income nil rate band is 0. But for basic rate and higher rate, they get. If you are a basic rate taxpayer, your savings income nil rate band is 1,000. And if you are a higher rate taxpayer, it's 500. That means 1,000 of your income will be taxed at 0%. That is the meaning of nil rate band. And if you are a higher rate taxpayer, out of that 500, whatever you are having will be taxed at 0%. That is the meaning of nil rate band. But if you are an additional rate taxpayer, you don't get anything, any benefit. Next. So while you are taxing, okay, normally you first tax non-savings and then savings. So that's why the rate of tax that applies for savings depend much on your non-savings also. Because if first 5,000 of the taxable income is a non-saving, you do not get in the zero rate, the starting rate of 0% for savings because everything goes under non-savings. So this is the procedure you have to do. First, calculate income tax on non-savings. Second, apply different rate of tax on savings income in the following order. First, finish off the non-savings slice, move on to savings. This is the order. First, see whether you can get the starting rate or not. Not every time it is available, by the way. If it's not available, go to savings income nil rate band. Okay. After this, normal rates. You have to follow this order. You can't change this order. First, starting rate, then nil rate band, then normal rate. That is 20, 40 and 45%. Now, so we are going to expand on this and explain you more detail. Starting rate. Okay. Very rarely you might get the starting rate for savings. It's very rare. Especially when you are having taxable income less than 5,000 for non-saving. Then you might get some of it for savings. So let's suppose your non-saving income is less than 5,000. Okay. So If it's so, the first 5,000 of taxable, which is saving income, we are not working on non-saving, whatever the amount we don't get, but it's less than 5,000. So the first 5,000 of taxable saving income will be taxed at 0%. It's tax free, you can say. That means no tax you have to pay on that remaining taxable uh, saving also. Okay. Now, if your taxable non-saving income is below 5,000, then your saving income fall into the rest of the first 5,000 is taxed at 0%. Okay. Wait, I messed up the first point. First point says there is no taxable non-saving income at all. So the entire 5,000 is your saving income, which is at 0%. Second scenario says some of it is non-saving, some of it is saving, but not the entire 5,000 is non-saving. So whatever is balance left out of that 5,000, let's say out of this 5,000, 3,000 is non-saving, 2,000 is saving. So 3,000 will be taxed at non-saving rate, whatever the rate it is obviously basic rate. And the rest 2,000 of savings will be at 0% because it falls within the first 5,000. Third scenario, where taxable non-saving income is more than 5,000, then you do not get the starting rate. It's not applicable for you, the 0% starting rate for savings. Second stage, savings income nil rate band. This differs on your income level, whether you are a basic rate or a higher rate. Okay. So here, if you are a basic rate, first 1,000 will be taxed at 0%. First 1,000 of the savings income. If you are a higher rate, the next 500 falls in the 0%. And if you're an additional rate, that means having taxable income more than 150,000, not applicable. So basically this refers to your taxable income. You'll be given some taxable income, no? 50,000, 10,000, 150,000, 160. Based on that, you have to decide whether you are getting 1,000 or 500 or none. Now, to see, some of you might be thinking, how do I decide whether I'm a basic, higher, or an additional? Because I might be having partially here and there. Some of it might fall under basic, some of it might be in the higher. Let's say you are having 60,000. So that 60,000, few of it will fall in the basic rate, 37,700. The balance falls on the higher rate. Which rate do I belong to? You belong to the band which has the highest tax band. For example, your taxable income falls within a certain band, right? You have to take the highest tax band. For example, if your taxable income is 45,000, you are said to be a higher rate taxpayer because it's more than 37,700. So you fall in that second category, 37,700 to 150,000 in between. So first, out of that 45,000, first 37,700 will be taxed at basic rate only, but the balance will be taxed at higher rate. So you have to take the rate, the higher rate. When you fall under two categories like this, the highest tax band you have to take, whichever the highest. Highest is higher rate, not the basic rate. Basic rate is the lower one. Okay. Now, normal rate, third stage. After savings income nil rate based starting rate is over, come normal rate. Normal rate is easier, like saving non-savings, 20, 40, 45% you apply on the balance of the savings income. Okay. So this we know. Okay. Now, remember, your basic rate band and a higher rate band, BRB and HRB, are first reduced by non-savings and then savings. Okay. That has been taxed at the starting and the savings income nil rate band. So in the examination, you always have to indicate which rate your income is taxed. Even if it is 0%, you cannot ignore it. You have to write multiply by 0%, or you have to tell it is taxed at 0%. Why? Because this shows the examiner that you understand that this income is taxable, even though it's 0%, but income is taxable. It is not exempt. Even if it is exempt, you have to write this income is exempt. There's a difference between exemption of income and something which is taxable but at 0%. So even if it is 0%, do not ignore, because some of you think it's 0%, so I will not show it or write it. No, it's wrong. You're losing out marks. You're going to get one additional mark if you write that this is taxed at 0% or this is exempt, writing a note to it. Okay. Now we'll be doing questions on savings and non-savings income before we move on to our third type of income, that is dividend income. Dividend income is easier compared to savings and non-savings because these two are big group. They have lots of income under this. Dividend will be less. Okay, so let's do a question. Our first question on ATX. So now test your understanding one. Okay, here we are going to do test your understanding one on a CB platform. In fact, all of my questions on ATX will be done on CBE, especially the calculation questions. The discussion questions and all I will explain you. Okay, so what I've done is even your textbook questions could be done on a CB platform. How? You just have to go to your practice ACCA practice platform, log into your my ACCA and go to ATX, and you just need to go to a blank workspace. So when you go to blank workspace, okay, you can do any kind of questions from anywhere. What I did is I went to my textbook, the Kaplan textbook, the latest textbook, copy pasted this question on the Word, and now I'm going to use my spreadsheet to do my calculations here. In fact, in ATX, this is how you have to use all your questions. Calculation questions need to be done on spreadsheet, and discussion questions you need to use word processor, like here, response options. You have to use your word processor to write. Okay, so let's start with our test your understanding one. The question is, I hope you can see the font is not too small. So basically this is test your understanding one only. Questions are there in your textbook. Okay. Okay, so here he have received a bank interest of 6,000. Now if I want to show something of importance, I can highlight it. Highlighter is here. I can use any highlighter, but I prefer yellow because yellow is something which is very easy. Okay. Okay. I think you can only highlight the exhibit, or because usually you are able to highlight. I know what's happening here, but if you take any of your maybe because this is blank workspace, that's why some of the functions might not be working for you, but you can actually highlight. When you select like this and go to highlight and choose a color, it will highlight it for you. But anyway, so you are having a non savings income of 6,000 because they say bank interest. Okay, see how they have used the word. They are not going to say savings, non-savings like that. You have to categorize it. So bank interest is a saving income, which is 6,000. And other than this, you have your employment income. Employment income is a non-saving income. You already have A, B, and C. A, if you see, it is 15,150, less than 37,700. It comes under basic rate. Next one is 29,650, again under basic rate, and third one comes under higher rate, 46,000. And you have been given the pay that is deducted at source, 516,3,416 and 6,686. So under these three scenarios, you have to calculate your income tax. That means your non-saving will change, but your saving 6,000 will remain same. Basically, they wanted to show how you can utilize the nil rate band and the starting rate of savings with different non-savings income. That's what you're supposed to do. So with this question itself, one question is enough. You'll be able to understand. So let's do that. Open your Excel here. Okay, will come right in front of you. So now, this is why you have to practice a lot in Excel because ATX heavily uses it. So first, you have to clearly label. Don't start putting numbers in the columns and all without properly labeling it. You are going to throw away valuable marks as well as your professional marks. So you have to write it's an income tax computation. Okay, income tax. Just see what I'm doing. Income tax computation. Okay, so you see, I'm going to. You can always change the width of the column. I can drag it because I want to put it in one column. It looks better. It looks more neater, more presentable, and all. So this changes and all is up to you. Okay, you have to do it. And I'm going to make I capital, and I'm going to make this bold. You can even increase the font and make it a little bigger. Okay, I can change the row width also. Now it looks more better, right? Income tax computation. We'll write the year. It is 2022 and 23 only. You see? Now it's A. So I'm going to write A and with employ. So I'm testing with each employment income the impact of tax. Employment income is here 15,150. So I'm going to copy this and paste it here. Paste special. Okay. Okay, maybe it's a text. Anyway, so see how I'm going to type it. Normally, in your PC, you are given the dollar sign, but for other than dollar sign, you have to use symbol. So go here, click symbol, and select pound insert. Okay. I know the font is a little small for your eyes, but you will understand as we are walking. If you're with me, you will understand what I'm typing there. Okay. So 15,150. Okay. You can even put a comma here if you want. Comma. So that it looks more. Okay. Now, even this also, you can make it bold so that, you know, I'm going to increase the font a bit. I'm keeping it at 14. Okay. Okay. Now I'm going to put it in 3 separate columns, non-saving and saving and a total. I don't have a dividend, otherwise I was going to have 4 columns. So first non-saving, then saving, then total, but a column for description also. First column is for description. This is same, we have done it in taxation, but I'm going to repeat it in ATX as well. So first I will write here non-saving. Non-savings, okay. Non-savings income. See, I'm going to extend this like this. Then savings income. I don't have a dividend, so I'm not going to write dividend. Otherwise, dividend is also there. So this will become total. Okay, you can put it in center. Okay, like this and make it bold. And I'm going to wait. You can always undo. You see what I did? So this is the undo button. Click it, and I'm going to make the font a little bigger. Okay, now I'm going to insert the pound sign So symbol and pound, paste. Okay, oh wait, okay, it's here, insert. Okay, here also maybe I can just copy paste, you see. Once I've done insert, every time I don't have to go to symbol and insert, just copy paste from the other slide, other cell. Try to be very fast in all this setting up the Proforma and all. You have to be very quick in all those things. Then first start with your employment income always. Okay, maybe I can just copy paste this, but this time it should not be in bold. You have to double click on the cell so that it is selected, so that you can remove the this thing. Okay, I don't want to keep it as bold, and I'm going to remove part A and also the number. I only want employment income. So it comes under non-saving 15,150. Make sure that you write the whole number. Don't put any comma and all, because if you put a comma, it becomes a text and Excel will not be able to perform functions on it. But anyway, we'll try and see. We'll randomly see whether it works it or not. 15,150 and let's say 2000. Okay. I'm just trying this. Let's try the sum function on this too. Enter. You see? One with comma, one without the comma. Okay, let's put comma here also and see 2 comma. Now let's do the sum function on this both. Enter. Okay, so with comma it works, but both has to be comma. Then you cannot put sum everything in number and sum without comma. Okay, so 15,150. Okay, I will remove this. This is only for testing. And your bank interest, bank. So I'm sure you will be able to increase the font and all. Take your own time and do it. Anyway, since I have to be a little quick, so I'm just putting the number, and so it is 6,000. Savings will remain same. What would be the total? 15,150, 6,000. See, I'm not using the sum function here and wasting my time, because it's just one number here and one number here. So I can just put it there. Okay. Otherwise, if there are so many things in that column, I would have drag it like this, take the sum function and then do it to do it faster. Okay. Then comes your, what I say, total income. Total income. Okay. First is total income. So total income also would be same. In fact, I will not put this comma and all. It takes a lot of time. I'll just put it. Okay. Better to put it without the comma and all in the Excel, because it helps you to type faster also. But anyway, if you put also, there is no harm in that. 6,000. You can copy paste it or you can type it. It will not take so much time. But for this, I'm going to use sum function equal to sum. Always you have to put equal sign before you perform a function. Otherwise, Excel will not perform the function for you. See this. Put sum. Nothing is happening. It will not do it unless you put the equal sign next to it. And then just take the 2 cell, enter. From total income, deduct your less PA, personal allowance. For personal allowance, you can just write PA. Examiner will understand. If you don't want to write the entire word personal allowance, just write PA. PA you will first deduct from non-savings. Understand this. Why? Why? See, if you savings has two advantages. Starting rate of 0% and nil rate band, but non-saving has none of it. So because non-saving have none of it, reduce from non-saving. For savings, anyway you will get the advantages of both. Later when we do tax planning, we are going to discuss the same thing. So personal allowance this year is what? 12,570. So I'm going to put bracket. Inside the bracket I'm going to put, because you are going to deduct 12,570. Okay, you see automatically when I put bracket, Excel takes it as a negative figure, which is good, because automatically you can perform the function. But when you are working in your own Excel, in your own laptop, it will take it as a bracket only. Automatically it's not converted to number, but this Excel has been programmed in such a way. That's why. Later you can go to settings and change the function and all those things, but I think it's a waste of time. Okay, so just go by it. This I can copy paste here, paste. Okay, now from savings I don't have to deduct, automatically from total. Now comes your taxable income. No need to underline and do all those things. Okay, it's going to waste a lot of time, because manually if you do, you put an underline, right? After total, underline, then minus, underline. No need to put all those things. Taxable income, you can just do the sum function. Since it's a minus, automatically it will be deducted only. You don't have to put minus here. See, just see what happens when I put minus here. If I try to put this and I put a minus, and then this number if I put, it will be added. You see what's happening? Because already it's taken as minus. So do the reverse of it. Don't deduct. Put some function. Automatically the minus number will be deducted. So just take this to cell. Wait. Some function bracket this to, if I take enter. You see? That's what's happening here. And this will remain 6,000 only. And when you're taking the total, equal to sum function. Remember, when you're taking total from here, it should be same. When you're taking total from here also, it should be same. Let's do that and see. Because I didn't put the bracket. Enter. 8580. So when you're adding 2580 with 6,000 also, it's giving 8580 only. Horizontally, vertically, it should be same. So now, once you get the income, apply the tax. Your total income is 8580. Then comes income tax. Income tax. Okay. So first column always keep for description. Now, out of this 8580, non-saving is 2580. So first take 2580 as it is. Okay. So when you're writing, you can just write non-saving income, or just write NS. Non-saving income. Do the calculation here. You don't have to write separately. Once you do here, just put equal sign. Just put this and just take, multiply it with what? Basic rate. Just put 20%. Because it's basic rate. Enter. This is enough. You don't have to write like this. That is 2580, then you are taking 20, then you are writing here is a basic rate. All those things you don't have to write. It's a waste of time. Examiner will understand its basic rate. They will understand you have performed a function. How? Once they click on the cell, they can see here that you have applied 20% to this rate. That's enough. Okay, that's enough. You don't have to write basic rate or 20% separately, this separately, and all those things, and then again do the calculation on another cell. No need. One go only, do the calculation. You have to know this time saving technique as well. Okay, now hold on. You'll be very quick to take this entire 6,000 and apply the rate. No, first there are three orders for savings. First, see whether taxable income falls between first 5,000. Yes, you see, entire 5,000 is not non-saving. Some of it you can utilize for saving also. So out of 5,000, balance 2580 went for non-saving. Balance is saving, which you can take it at 0%, the starting rate. Okay, you can take the savings, the starting rate, which is 0%. So to do that, you can write here, but for description, write correctly. Okay. So here, savings starting rate. I'm writing SSR to show savings starting rate. Okay. So here put equal to. How I will know it? Just take 5,000 minus. Okay, I will put bracket actually. So from 5,000 deduct this and multiply it by 0%. Enter. It will be 0. See, even if it is 0, you might be thinking I will just write 0. No, don't do that. You are going to throw 1 or 2 marks away. You have to properly show it like this. Even if it is multiplied by 0%, you have to show it. Because when examiner clicks on the cell, they are going to show it, see your workings here, for which they are going to give you marks. You are going to get marks for your workings, not for your final answer. Final answer only 1 mark. Even if final answer is wrong, at least your working will support you there. Okay. So I'm writing my savings starting rate SSR and showing it also balance of 5,000 at 0%. Now what's remaining? What's left? Remember, taxable income is 8580. It's a basic rate. Basic rate means I'm going to get savings nil rate band also at 0%. At what? How much of income? 1,000. Remember, basic 1,000, additional 500 and additional higher 500 and additional nil. So I'm a basic rate. I'm going to get the entire 1,000 as savings nil rate band. So here, savings nil rate band. I'm using short form. So here I'm going to put equal to 1,000. Just put 1,000 equal to 1,000 into 0%. Enter. Here you can show your write your income if you want. Okay. For example, 5,000 minus this was how much? This is just for rough reference I'm using because I want to show how much of my income has been used to show the balance. So this is 1,000. I'm sorry. Okay. So out of non-saving 2580 I've used. Out of savings, first 5,000, 2520, 0%, then 1,000, then the balance. So when you're writing the balance, it is 6,000 minus this, because this I've used for saving, plus this 1,000. I want to know the balance out of the 6,000. 2580. Okay, so 2580 is still left. If you add up this, okay, just use the sum function. You see, I didn't put the bracket, that's why. It should add up to this total. I just wanted to know the balance figure, okay, remaining figure. So here, savings basic rate, SBR. Here, it will be on this amount. This multiply by 20% basic rate. Because I've used, exhausted everything. Nil rate band is used, starting rate band is used. So balance out of the 6,000. 2 for 20, 0%, 1,000, 0%. So balance to 580 at 20%, which is 516. You see? So now, this is usually the income, okay? Income taxes on this column. So here, equal to sum function. Just add. I always forget to put the bracket. Just add. You have to take all the columns when you're showing the function enter. So the income tax is 1032. Remember, there is a payee which you have to deduct, which is 516. This has to be deducted. So less payee. In fact, this is income tax liability. Okay, 1032. Payee. 516. This is income tax liability, and after you deduct payee, it becomes income tax payable. Okay, so equal to sum function, enter. 516. This is your income tax payable. This is what requirement says. Always go back to the requirement and see whether you have correctly done what the requirement says. So it says income tax payable. But remember, all this calculation that I'm showing you is asked in taxation, not advanced taxation. But why am I doing it in ATX then? To refresh yourself again. You need to know the basic calculation to do the advanced calculation later on. Okay, because ATX is more like giving advice to your client, interpretation of the calculation of tax. They might have already calculated tax. You have to show the correct treatment of tax or something like that. Because there's professional level. Here you don't have to sit and do all the calculation. For that you have people who will be doing the calculation. You are on the higher level, but you have to know the basic calculation. You cannot forget it also. So if you were very good in taxation, you have an added advantage for ATX. But in case you forgot also, there is no harm. My ATX lecture itself already will revise taxation also. Okay. So now, same thing we are going to do with B and C. The impact. So here we are able to use the nil rate band of 1000, entire 1000 because basic rate taxpayer, as well as because it fell within first 5000, we took the balance of saving at 0% also. The starting rate band. We utilized both. Now we'll see in the second scenario when your non-saving is increased, what is the impact on savings. So let's do that. Same place I can do. I'm not going to change it anywhere, just I'm going to change the figure in this table itself rather than doing the table again. Okay. So here employment income is, okay, I'll change here itself, 29,650. But make sure that you change that is part B and non-savings, I mean the amount 29,650. Okay. So bank interest remains at this. This is employment income. This also I have to change. See, one good thing of having function is, rather than you typing, is that once you change the figure in one place, automatically cell will change the number. So it's much faster. Now again I have to type. So what I'm going to do is I'm going to use the sum function here. So that for part C I don't have to do any hard work. Okay. So you see automatically this has been adjusted if you see the total. But here it needs to be adjusted. Personal allowance still to 570, you need to deduct from non-savings only. But total income, here also some function I'm going to use. Okay, set this, enter. So automatically everything changed for me. Okay, this figure automatically came because earlier I did some function. This is the benefit of having function rather than you typing in the total, even if you can do it. Especially if you have multiple scenarios like this. If it's for once, it's fine. But still my advice is to do function. Okay, it's good. It shows examiner that you know. Now come to the income tax. 17,080. So when you come here, I think they have already calculated the tax for you. See, when you calculate it, they have already taken this at 20%. Problem will come when rate is changed, but thank God both are at 20%. There is no impact. So automatically income tax has been calculated for me for non-savings 3416. But let's come back to savings. Can you take the 0% starting rate for saving? No, because first 5,000 of taxable income does not fall in the saving. Entirely it falls in non-saving only. So that thing is gone. Nil rate band can you use? Yes. It is a basic rate taxpayer looking at the taxable income 23,080. You can take up to 1,000. So 1,000 into 0% that you can use. So this is gone. This you cannot take. But this you can take. 1,000 into 0%. That's done. And what's next? So this has been entirely used. Out of 6,000, 1,000 as 0%, balance is 5,000. Balance is what? 5,000. So balance 5,000 at 20% basic rate. Enter. Which is 1,000. So now income tax liability already it is added, but pay will change. Pay for the second year is 3416. I'm just going to change 34. You see, automatically everything changes. Income tax payable is 1,000. In fact, when I'm showing answers also, I'm going to highlight it. Either you can highlight it like this, make it bold, or you can fill in that cell like this. Like this. Just choose any color. You see, it shows your number is highlighted. Like this also you can do. Not only for ATX, any paper, AFM or any other paper where you are using Excel, you can do this. Now coming to part C. Part C, tax is 46,000. So I'm going to change this figure to 46,000. Automatically changes will take place everywhere. So you see taxable income is this, and this is your total income. Even tax is calculated automatically for me. It took 20% on this because basic is 37,700. So entire basic rate falls here. Can I use my savings starting rate 0%? No. First 5,000 does not fall in saving. Can I use my new rate band? Yes, I can use it, but not the 1,000. I can use up to 500 because he is an additional, higher rate taxpayer. Look at their taxable income, 39,430, more than 37,700. So I can only use 500 of nil rate band. So here it will be 500. Nil rate band, not 1,000, 500 into 0. You see, only 500. But for savings, see, out of this, you are not using the entire 37,700. Some portion of it basic rate falls in saving, no? So we'll have to see that first before applying the higher rate. Just copy paste it here. Copy paste it here. This is 0. In fact, okay, this column I don't have to maintain anyway. I'm working on only this. Okay, so this saving rate. So how will you know that basic rate? This is how you do it. Basic rate is 37,700. Deduct this amount from there. Deduct 500 also because you have used 500 for basic rate. And multiply that balance with 20%. 754. Okay. Out of that, the balance will be at 40%. Okay. So basic rate entirely you have utilized 37,700 balance. Okay. So here you take the balance. Okay. How do you take the balance? Just take this amount minus 37,700, the additional. Okay. And multiply 40% higher rate. Enter. So automatically 8132 is changed. You only have to change this figure. Pay as you earn is bracket, okay? Bracket 6686. You are not getting repayment under any because payee is less than income tax liability. So your income tax payable is this. So see, under 3 scenario, what is the difference? First, part A, you use both nil rate band and starting rate. Part B, starting rate was not available, nil rate band was there. Part C, nil rate is not there, starting rate reduced from, starting rate is not there, nil rate reduced from 1000 to 500. Under some condition, both are not there. Okay, if you are an additional rate taxpayer. So now let's move on to dividend income tax. Now let's discuss rate of tax on dividends. So first 2000 of dividend is at 0%, that is known as dividend nil rate band. Remember, this is not dependent on anything like how savings income is dependent on whether it's basic or higher rate. This first 2000 of dividend income will always be taxed at 0% no matter what is the income level. Okay, this is the rate for this year. 8.75% for basic rate, 33.75 for higher and 39.35 for additional rate band. Bands are same for any group of income, whether it is dividend, savings or non-saving. That is 37,700, 37,700 to 150 and over 150,000. Only the rates differ. This will be given to you on the exam. Now, how do you apply dividend? After non-saving, saving is dividend. Okay, dividend rate band first 2000, balance dividend is at the normal rate. Okay. And so this is easier. Working on dividend is easier because first 2000 always 0, balance at the normal rate. And any remaining dividend taxed at the dividend rate. Now, and remember, when you're putting the dividend rate band at 0%, does not matter what is the dividend income. You don't have to look at the level like savings. Now let's do 2 questions on this, like savings, non-savings, and now we are including dividend also. So now we have 2 questions dealing with dividend. First question is employment income 55 with pay 9432, dividend 6000. You need to calculate income tax payable. That is illustration 1 from your textbook, Kaplan textbook. Test your understanding 2. You have been given property income 40,000, bank interest 2,000, dividend 10,500 and calculate income tax liability. Okay, so let's do that. I am going to use the same table I previously used, only changing the figure. So already I have a table for non-saving, and first question I only have non-saving and dividend, no saving. Okay, but I will keep it blank. Instead I will put another column here which is dividend. Okay, just never mind, spelling mistake could be okay. So now I'm going to keep this blank. Okay, so I'm only going to put, so already we have employment income, and rather than putting bank interest, okay, I will put a dividend income. The reason I'm keeping the savings income column is for my next question, so that again I don't have to waste time to type it again. I'm going to keep it blank. But in your exam, you should not keep it blank like that. If saving is not there, don't put it. Okay, only two columns, non-saving and dividend. But it's unlikely that you will not be given. In fact, ATX all three will be given: non-saving, saving, dividend. Okay, this is only for me to save time. Okay, because I need it for my next question. Test understanding 2 has savings also. That's why I'm keeping it ready here. And total income less personal allowance, then comes my taxable income, then comes my income tax calculation. So here employment income is 55,000. Dividend is dividend income. Okay, dividend income is 6,000. Okay, so here if you see, automatically it's changed. Okay, wait, this is in the bank interest column. It should not be 6,000. In fact, 6,000 has to be here. This should not be 55,000. In fact, there should be some. Okay, I get it. I have put it in the wrong column actually. In fact, there should be a total column as well. So here sum function, I'm going to put all three. Bank interest nothing. Dividend is 6,000. So sum function is 3. Okay, equal to sum function. Sorry. Equal to sum function. This 3 I'm going to add. And here when I'm doing, I can just drag it to the other cell. Okay, not it. This will not come in the dividend. In fact, wait. Yes. This 50,000 will go here. So either you can do it like this, or horizontally it should give you 61,000 only. Okay, now it's correct. Okay, now it makes sense. Now personal allowance will be 12,570. That's the same here. Just copy paste it here. Not from dividend, from total. Paste. And now comes the taxable income, just the sum function. From total income, we deduct personal allowance, enter. and here also is the same. In fact, you can just put 6,000 because for dividend it's just 6,000. Now I'll use sum function because I need it for my third. This and this, the blank space, and here sum function, this and this, enter. Okay, now we are going to calculate the tax. So you can see 48 430 is the taxable income, because earlier the number was here, that's why it's taking this negative figure. But now when you're taking taxable income, this is the issue problem. Okay, when you're taking tax, you cannot take the entire number 42 430 and apply the tax. We have seen it in earlier questions also. You have to take the basic rate, then the higher, then the additional. So out of this, because this comes under non-saving, 37,700 will be taxed at 20%. Okay, so equal to this minus 37,700. I'm going to put this in bracket. So the subtraction is done first and then multiplication. Multiply by 20%. Basic rate. So non-savings will be taxed. First 37,700 non-savings are basic rate. Okay, I'm sorry, I'm done mistake. The balance comes later. First 37,700 only you have to tax. 37 equal 37,700 into 20%. Then comes the balance. So here it will not be savings nil rate band. It will still be non-saving only, but at higher rate. This is at basic rate. So when you're taking this, it has to be equal to this, okay, because this is the non-savings total. Out of this 7,700 you have to deduct because that you have taken for basic rate, and multiply 40%. Enter. So now entirely 42,430 has been used in non-saving. Balance 6,000 is dividend. So close your eyes, take first 2,000, tax at 0%. This is dividend rate. So equal to 2,000 into 0%, enter. So out of 6,000, 2,000 goes at 0%, balance 4,000. Dividend, or you can write dividend DNR, dividend nil rate. Dividend normal rate, or you can write basic rate. No, it will not fall in the basic rate. In fact, it will fall in the higher rate. Why? 37,700 falls in non-savings. First basic, so higher only. Equal to 4,000 into 40%. Enter. I'm sorry. This is dividend. You see? What did I just do? This is the common mistake, even you can do it. This is not 40%. Dividend rate is different. Higher rate is what? 33.75%. 33.75%. Yes. So now add up everything. So I think it's already added, which is 10,782. Okay. From that, deduct payee. Payee has been given as 9,432. 9,432, enter. So income tax is 1,350. Now let us do test understanding 2. 40,000, 2,000 and 10,500. So what I'm going to do is I'm going to put 40,000 here. For savings, I'm going to put 2,000, and this is 10,500. So here it is the sum function, or in fact I'll just put 2,000. So you see what's happening here. Total income 2,000. Automatically it is added 52,500. Okay, personal allowance is also deducted. Taxable income is found. Total income is found. That's done. So when you're calculating tax, now you need to be careful. Click here. See what's happening. They're taking 37,700. This time you should not do that. This time it's less than that. So take this entire and apply 20%. Just I'm going to change the figure. See how using Excel on a CV platform helps you to do many questions within short span of time. I just need to change figure here and there. Automatically calculations are done. If you wanted to do this manually, it might have taken you a lot of time doing calculations every time from scratch. Okay, now savings. Okay, nil rate band is there. I'm sorry, there is 2,000 here. Just a minute. Okay, so now there is a savings nil rate band because it falls in 37,700, and also it is a higher rate. So how much of savings nil rate band? Starting rate of savings you will not get. First 5,000 does not fall in saving, but nil rate band, yes, of 500 you will get. So this will be savings nil rate band 500 into 0%. Done. So from, okay, now still you can use the basic rate, because if you add 500 with this, it is still less than 37,700. So first we'll utilize the basic rate. The remaining savings rate we have to calculate. So savings normal rate, SNR, it will be equal to 37,700. Okay, just do one thing. Some of the basic will still fall here also, because if you add this 2 up, 27 and 2, it is 29,430. Still it's less. So the entire, but out of 2,000 already 500 is at 0%. So remaining 1,500 at 20%. So it will be equal to 1,500 into 20%. Next, so savings is also done, non-saving is done. Still we have to utilize the basic rate band. We have to take some from dividend also. So for dividend, how should we do dividend? Remember, first is the dividend nil rate band of 0% you have to apply before utilizing basic rate also. So here 2,000 into 0%. This is dividend nil rate band. So what's happening because of nil rate band? See, base dividend, they were not able to utilize the entire amount in the basic rate band of 37,700. Why? Because of that 2,000 0%. First you have to utilize that 2,000. That means from basic rate band 2,000 is going at 0% nil rate only. So it's you reducing your basic rate band for dividend, available for dividend, because of that 2,000. Now dividend normal rate, DNR.
Here it will be like this. First apply the basic rate. To apply the basic rate, 37,700 minus, take this, minus, take this, again minus 2000 because you have taken near rate back. So it is 6720. This you have to take, multiply by 20%. And sorry, again I did a mistake. It's dividend rate, right? So basic rate of dividend is not 20%, it is 8.75%. You see, the more you do this type of mistakes early on, better it is for you, rather than doing it later on the exam. So it's 5489. You can round this figure. How can you round it? You should know this functions, by the way. How to round up, how to round down. There is another function to do that. Okay, you can go here 0.00 and you can do this. If you do this, it will round it up to 2 decimal places. Or you can go to all. See, from here when you click here, go to custom, all, put 0, 1 0 only. Okay, put OK. You see, try to put everything not in decimal place as a whole number. Okay, you have to round it up to whole number. There is no pay here, so this you can take it out. Then comes the higher rate. Okay, so higher rate of dividend will be this minus 37.7, the balance. So you put this inside the bracket because first I needed to be deducted before I multiply. What must? You have to be very careful of this. Multiply by higher rate is 33.75%. Enter. It's the same thing here. I will go here, custom, 0, okay. And income tax liability. Go to some function and take entirely from here, enter. This also I'm going to round here. Go here, custom, 0, okay. So 7087 is my income tax, not payable. See, the requirement here asked here income tax payable, here they ask income tax liability. What is the difference between two? It's a small difference of a wording, but there's a difference. Income payable means that is the final income that you're going to pay. Income tax liability means there are some deductions which has not been deducted yet. You only have calculated income tax. Still some deductions are yet to be deducted, like payee. So once you deduct payee from income tax liability, then it becomes income tax payable. So be very, very careful in your exam whether they are asking income tax liability or income tax payable. If it's income tax liability, do not deduct payee. If it's income tax payable, deduct payee. Like in the earlier one, you see here, I've done, okay, I've changed it, but yeah. So now we are over with the dividend also as well. We will be moving on to other deductions like qualifying deductions, like qualifying loan interest, what are the conditions under which it can be deducted, and all those things. Next is qualifying loan interest. Now, for some loan interest, which is known as qualifying, because you can deduct them from your income while calculating tax. But there are 4 conditions under which your loan interest is a qualifying, for which you can deduct. Okay. But relief is only given for interest paid on loan for a qualifying purpose. If you are spending it on to finance a project for qualifying purpose and interest is paid at a commercial rate, then only. If interest is not paid at commercial rate, it's not a qualifying loan interest. Okay. Amounts paid in excess of this are not allowable. Only for that purpose, qualifying purpose only. Anything not for qualifying purpose are not qualifying loan interest, hence you cannot deduct them also from your total income, because now you're going through qualifying deductions. Hereafter onwards, we have finished all the types of income, starting from non-saving, savings, and dividend. Now, all qualifying loan interest is paid gross. Okay, and any of this amount paid in the tax year is allowable relief against total income. That means you can deduct from total income. But this is also subject to maximum deduction, which we are going to go through later. These are the four main types of qualifying purpose for which if you take a loan, interest on that you can deduct from total income. First one, partnership. If you are taking any loan to contribute into the capital of partnership, yes, that interest you can deduct from total income. It could be unlimited or limited liability partnership. And if you are making a loan, if you are giving a loan to the partner, okay, a loan made by a partner for the purchase, if a partner, any of the partners is taking a loan to purchase a plant or machinery for use in that partnership, so in the year of the purchase and the next 3 years they can claim this deduction, like interest on that loan for the year when they have purchased their plant and machinery, and the following next 3 years also they can claim. Second condition, personal representative. When, let's say, representative, okay, whoever is the representative of the person who has died is going to pay inheritance tax. Now you must have taken a loan to pay that amount of inheritance tax, so interest on that loan you can deduct, but it's only for 1 year this relief is there. Okay, and person must have died, so you are paying inheritance tax on a deceased person's estate. For personal representative, if they are taking a loan to pay that inheritance tax, then only it is allowable deduction only for 1 year. Third is employee controlled companies. See, these rules and regulations are very tight. You have to know them. I would say if you can memorize it, it's better, because these are rules which cannot be changed. Conditions needs to be remembered as it is. So, a relief is available to full-time employees for loans taken out to acquire ordinary shares in an employee controlled. Okay, if you are taking shares in an employee controlled, relief is there, and is only for full-time employees. But for whom? For UK or EEA resident. Okay, UK or EEA resident. For uncoded trading company. So it has to be full-time employee, it has to be a resident in UK or EEA, and uncoded trading company. In an employee control company, of course. If that individual has claimed some other relief like EIS or SEIS relief, he is not applicable for this qualifying loan interest relief. Especially for in respect of share purchase. For the share purchase, if you have taken this relief, then there will be no relief for the interest. That means no qualifying loan interest. Even if they have taken a loan on that, they will either get this or that, one interest, one relief only. Two reliefs together, you cannot claim. So here also tax planning you have to do in such a way where you can save maximum amount of tax. Is it through EIS or SEIS relief or qualifying loan interest relief? Whichever is greater, you have to choose that. Fourth condition, closed companies. In detail later on in ATX, we are going to study all this in detail. What is closed companies? Okay. What is employee control company in detail. But for just now, these are the four conditions in briefly. But closed companies also is a chapter which we are going to study later on. So if you are purchasing any shares in these closed companies, okay, or loan, giving a loan also to this closed trading company, it has to be a trading company, okay, closed trading company or a company in the EEA, then any loan on that is deductible, okay. you are giving a loan also to this closed trading company, it is still allowable. Now, following conditions must be satisfied here. For closed companies we are talking about. Further conditions. First, individuals with associates should own at least 5% of the ordinary share capital at the time of interest paid. When you are paying the interest, at that time, 5%, at least 5% ordinary share has to be owned by that individual. If it's less than 5%, you cannot claim. Next, individual should own some shares in the company at the time interest is paid. During the period from the purchase of the shares until the payment of the interest, he have to have the shares in his hand. And also, they must have worked for greater part of the time in the actual management of the company or an associated company. They should have worked there. Otherwise, if you are taking an interest, not working there and not holding the shares until the time of purchase of shares and the interest payment, you are not eligible for it. So they are very strict on these conditions when it comes to qualifying loan interest. Next, same like the previous one. If individual has claimed EIS or SEIS relief, they cannot claim this qualifying loan interest relief. So that's it. Remember the 4 conditions. It has high chance of coming in your ATX. Something not tested in taxation has a very high chance of coming in ATX. Remember that first. Okay. So treatment of royalties paid by an individual. What about royalty? We often pay royalty like on patent or copyright. There are difference between these two types. Okay. Patent royalty is different. Copyright royalty is different. Because both are allowable deductions, you can deduct both of them from your adjusted trading profit for a business. So for copyright royalty, you are paying it in gross. For patent royalty, you are paying it net of the basic rate of 20%. Anything you are paying net, remember, it is at the basic rate of 20%, except 2 things. Can you recall? One is trust and one is, remember, recall. That is something to do with trust. Dividends of the trust and the income. IB trust, yes. There the rates are different. 45% and but other than that everything is 20%. Trust will be different. When we cover trust, I will explain it. And collection of patent royalty is not going to be asked in ATX. So don't worry about patent royalty. But if copyright royalty is there, pay gross. That means you can deduct that amount from your adjusted trading profit. If it's for a business, for a self-employed, we are talking about. Obviously, if you're employed, you're not going to receive copyright royalty, right? It is for a business. That also, if you are a very famous business having some designs where you have a copyright thing, like music lyricist might have this, or the book publisher or an author, they have this copyright royalty. Okay, anyone wants to purchase that, they have to pay them a royalty. Okay, and that they also have to pay tax. Now, second part of this lecture, we are done with income tax computation, all personal, all allowable deductions, all types of income, exempt income, taxable income, everything is over with the tax rate. Now moving on to personal allowance. Personal allowance is also given every year to the individual paying the tax. This is like some kind of relief or deduction. You know, there are various types of deductions in UK. One of the major and fixed is personal allowance. Individual to individual, they are given. Okay, even children have personal allowance. So every taxpayer is entitled to this personal allowance. This year is 12,570. We have seen it earlier. There is no restriction on this personal allowance. Will be given it in full. Even okay, so it will be starting from the year when you are born and when you die. So let's say in a tax year, you only were alive for few months. Still, you will get the full personal allowance. I mean, of course, you are not paying the tax. You will not be allowed to pay the tax, but your representative might be paying the tax on your behalf. But still, personal allowance will receive in full, even on the year of the death. Even if you're only alive for the partially only you're alive for that year, tax year. You're not alive for the full year, no worry. Full personal allowance will be given to you. But personal allowance can be reduced based on your income. We'll see that later. Before that, when you're deducting personal allowance, in previous question you must have seen, I always deducted from non-savings first. Because in most of the cases, this is beneficial to do. Why? See, non-savings income does not have any benefit, like savings or dividend. Dividend has been rate band of first 2000. Savings also has dividend rate band as well as the starting rate of 5000. But non-saving has none of it. That's why. So most cases, yes. But you can deduct personal allowance from any source of income, by the way. But mostly it is done in this three order. First non-saving, then saving, then deduct. Now, sometimes it might not be the case. And surplus personal allowance are normally lost. If you're having any surplus personal allowance, sometimes it might be lost. And the worst thing about personal allowance is neither you can set them against capital gain, that means you cannot reduce your capital gain by personal allowance, nor you can transfer it to any other taxpayer. Either you are utilizing it fully or you are not utilizing it fully, you are losing it. Such a waste, right? But when you are married, for couples, spouses, or a civil partner, you can transfer part of personal allowance to your spouse or civil partner, and that should be maximum of 1260. 1260 is the max. Beyond this, you cannot transfer. So, how personal allowance is reduced? It is reduced once you move from basic to once you go beyond a certain level of income. Let's start with high income individuals. So when an individual is earning an income more than 100,000, you start reduce your personal allowance starts reducing. We'll see how, because there's a formula. There's a fixed formula for it. That's why. So how is this personal allowance is reduced? It is based on the term known as ANI. ANI stands for adjusted net income. Even your net income has to be adjusted net income. It is calculated like this. First you calculate your net income, then any gross gift aid donations you have made deducted. Don't worry, because it is not asked in ATX, they will not ask you, give you this. But if you're having, they will give you pension contribution. Okay. So any gross personal pension contribution is there, deducted from net income, and it becomes your adjusted net income. ANI. So once ANI, so that is your adjusted net income. If that exists more than 100,000, personal allowance starts reducing. It is reduced like this formula. So you take your adjusted net income minus 100,000, 50%. This is how much your personal allowance will reduce. That means anything beyond 100,000, okay, half of it will reduce, 50% of it. By 50% of it, your personal allowance starts reducing. Okay, and it's always better to round up to the nearest pound, whatever the reduced personal allowance is. Don't keep anything in decimal in ATX as well as taxation. But in your exam, you can round up or down. Anything is fine. Let's say a taxpayer which has an ANI of more than 1,000, 125,140, 140. Anything beyond this, there will be no personal allowance at all. Okay. they'll be not entitled. Okay, they'll be not entitled to any personal allowance at all. If you're not understanding why, do the calculation and check it yourself. Check it yourself. Take 125, 140 or some number beyond that, deduct by 100, multiply 50,000, it will be more than your personal allowance amount, which is 12,570. So anything more than 12,570 cannot be, no? You can only reduce a personal allowance up to that personal allowance amount only, which is 12,570. Beyond that, you cannot reduce more than that. That's why. So from 100 to 125, 140 keeps reducing. Anything beyond 125, 140, no personal allowance, zero. Okay, I will do it and check. So 125, 140 minus 100,000 is 25,140. Take 50% of it, which will give you 12,570. Yes. So if you reduce 12,570 by 12,570, zero. Personal allowance cannot go in negative. Okay. So your job is very easy. Anything if ANI more than 125, 140, no personal allowance. Very easy. Okay. And effective rate of tax on income between 100 and 125, 140 is 60%. How? It is made up like this. See, once you are 100,000, anyway more than 37,700 is a high income earner, but it's less than 150. So you are not an additional income tax rate. Higher income tax rate will be applied, which is 40%. That you add with 20%. Why? How much you are losing personal allowance? Half of 40%. No? Half of 40% you are losing as a personal allowance. You see here they have applied 50%. This is on the amount, but if you take it in terms of percentage, it is 23%. Because you will fall in 40% only, high rate only. 40%. So out of that half, you are reducing personal allowance. So that whatever you have lost personal allowance, you add with high rate income tax 40. 40 and 20 becomes 60%. Even though you don't have to remember all this, it's not asked. This is just for your general information I provided. Because in the textbook you must have seen they will give you this, and then one might come and ask me what is this effective rate 60% and all. So that's why in order to clear that doubt, I've included this here. Okay. Now, so if how does taxpayer plan here? If they see that they are near that margin, so they want to reduce, then they start reducing their adjusted net income. How do they do that? By making additional gift aid or by making additional personal pension contribution, because it reduces your ANI below 100,000. Remember, every one of us wants it to be below 100,000. Then only will claim full personal allowance, otherwise it will reduce. And this is how you allocate personal allowance. Okay, so you deduct from non-savings and any remaining from saving and final dividend. But tax legislation requires us to deduct personal allowance in such a way which is most beneficial according to that circumstances. Okay, for example, you might deduct personal allowance against dividend before you deduct from savings. Why? Because savings, so you want to take advantage of savings income nil rate band or the starting rate of savings income. Let's say savings income fall in the first 5,000. There is no non-saving. Savings fall in the first 5,000, and also you are in a basic rate, so you can get 1,000 in rate band also. So in order to take that, anyway you are getting. So in order to take that advantage, you first deduct personal allowance from dividend. Understanding? Why? Because if you are a higher rate, remember, higher rate earner, high rate income earner, it does, you will anyway get the nil rate band and the starting rate of 5,000. For savings, if first thousand of saving falls in that category. Assuming you have no non-savings income, only savings and dividend. But dividend, you have to pay the additional in higher rate. So rather reduce personal allowance on dividend first and pay dividend at basic rate, and automatically savings daily rate plan and starting rate also, if in case if it's available, take advantage and pay a very small amount of savings at additional rate if in case we have to pay. But dividend does not have so many benefits, only nil rate of 2000. But that 2000 does not matter irrespective of your income level. But savings income nil rate ban is dependent on an income level. That's why in that condition, deduct personal allowance from dividend first, then savings income. So now let's do a question on this allocation of personal allowance and impact on income tax.
So now there are four questions dealing with personal allowance. Test understanding 3, as you can see here, test understanding 4, and illustration 2, and test understanding 5. So let's start with test understanding 3, where he has an annual salary of 130,000. Whoa, that's a high rate taxpayer, and has made gross pensional contribution of 19,000. And you have to calculate taxable income. See, they didn't say income tax liability or income tax payable. They said taxable income. So we'll do just that. Okay. So we are going to use the same table we have used previously. Okay. Only under non-saving, only one type of income is there. So it's very easy, which is 130,000. And remember, because it's 130,000, it's beyond. First, you have to calculate your adjusted net income because you have been given gross personal pension contribution. Okay, you have to deduct 19,000 from 130,000 first to see how much your basic personal allowance will be reduced. How you can do this? Okay, rather than erasing this, okay, I can do sidewise. Okay, in order to save time. So here my basic allowance is 12,570. This is my basic allowance. Okay, now net income is 130 and gross pension is 19,000. So I'm going to take this minus this 190,000. Okay, I'm going to deduct it. So once it is deducted, sorry, this is 19,000. Okay, so now income limit is 100,000, right? So here I'm going to show this. Okay, I'm going to write here 100, and then now I'm going to deduct this from 100 because I want to know the excess of 100. But to know that excess of 100, remember, it's not 130 minus 100. First, you have to deduct gross pension contribution, then only minus 100,000. So 11,000. And this 11,000, you have to take half of it. Half of it only will be reduced. Right? So here when you're taking, you just take 50% of 11,000, which is this. So when you reduce your this one, it will be this minus this. Now your personal allowance will be 70/70 only. Okay. So there are no other income. Your employment income is only your total income. Total income is only your net income. Okay. So now we'll only take our taxable income. That's it. That means we just reduce this. So we'll copy paste this amount to here. Paste. Okay. Undo. Okay. We are going to reduce everything from here. Okay. Just take. Okay. Copy paste this. You see, it's showing a reference. Why? Because it has a formula in it. So whenever you're copy pasting a formula like this, you just cannot do it copy paste. You have to copy, come here, paste special. Okay, and you can select, do you want it with the formula, with the or just the value, format, or all. I'm just going to take the, I'm going to take it with the formula. Okay, so the moment someone clicks here, they can see where the formula comes from. Okay, you can just take the value also, it will just show the value, formula will not be shown. And now this minus this will be your taxable income. So just change this word into taxable income, that's it. The question only asked you to calculate taxable income. Done. Now we are moving on to test understanding 4. Here we have 3 separate types of income, and question is income tax liability: employment, bank interest, dividend. So we'll just put this figure here and do it. So here it is 137, 700, 22, 300, and 17,000. Okay. So here is the sum function, this. Okay, total income is also the sum function. Wait, just wait a minute. Some error has been done. Okay. So when you're putting the sum function, just take this 3, enter, and you can drag it to the other cell. Okay, you can just drag it to the other cell like this, because you're taking the same 3 columns in the other rows also. So you see already I've got the total. Now personal allowance. Okay, just check. In this, there are no personal contribution, nothing to deduct. So this itself is only your adjusted net income. Which one? This one. Well, it will not reduce this. Okay, this amount. Okay, I'm sorry. Taxable income, nothing goes. So if you see your total income, 177,000, it is more than 124, right? They have given you the amount, right? Beyond certain amount, personal allowance is 0. So nothing to reduce. This is only your adjusted net income. So your personal allowance will be 0. Okay. It can, because it exists more than 125,140. So it's nil. Even if it's nil, you have to show personal allowance as 0 here and make a note. So when you have to explain certain thing, why it is so, just do like this, mention note. You can give a number also, note 1. And that note 1, you can write somewhere down like this, note 1. Or maybe you can color code it. Maybe you can put some color here, let's say orange, to show. And maybe here also you can color coordinate it also. Where is it? It's up here. You see, you can color coordinate it like this to show, so that later when they go down, you can see that it's the same color. or you can, without the color also it's fine. Okay, you can mention that it's under note 1. When you go down to note 1, you have to see why it is 0. So you have to explain them rather than just you looking the number and deciding it's 0. No, you have to write why it is 0. You have to say because it is more than, adjusted net income is more than 120, 125, 140. That's why. You can try it yourself and check. Put this 177 minus 100,000, take 50%, it will be more than the personal allowance amount. Okay, that's why. So it is 0. So taxable income will be same as your total income only. I'm not writing it again here. Do it. And now we are going to find tax. So first on 37,700. So here 37,700 into 20% straight away. Next, what's next? So if you see here 37,700, if you minus it from this, 100,000 is remaining. That 100,000 will be taxed at 40%. So equal to 100, 1, 2, 3 into 40%. So this entirely goes, you are left with saving. Because it is higher rate, additional rate, it's more than 150,000, right? So you are not getting, the starting rate of saving is lost because it does not fall in first 5,000. Nor the nil rate is also available because it's an additional rate taxpayer. So no 1,000, no 500. That is also gone. So this, now you have to see how much of it will fall in that higher rate before you move on to the additional rate. Okay, that means out of 150 you have to take. So this is how you have to do it. Equal to, since you have entirely taken this, so 150,000 minus this amount, which is 12,300. So up to 12,300 you can take 40% and apply 40%. It is giving a bigger number, no? Something is wrong. What is wrong? I didn't put the bracket here. Because when you don't put the bracket, it will first multiply it with, total income will be multiplied with 40% first and then it will be deducted 150. That's wrong. I told you. First, amount needs to be deducted, then multiplication. That's why I put bracket in the appropriate places. Okay. How did I know the amount is wrong? Obviously, just look, it's more than 40,000. So like this, you have to be smart enough to figure out your own mistake. Even if you're doing Excel, high chances are that you might incorrect a wrong number, or you might not put the correct bracket at the correct place, or positive number you're putting negative, you're deducting rather than adding. Things can happen like that. You need to be very careful. So I just looked at the figure and figure seemed unreasonable with that range. It's more than 40,000. So it makes sense that mistake has been done. Now, so out of this, part of it will go to the additional rate. Okay. So how you can do that is like this. 150,000, deduct this, or oh, wait a minute. Add this with this and deduct 150,000 and apply 45% to it because additional rate 4,500. And then we are done with this. So out of this, part of it is at additional, part of it is at higher. Now dividend only 17,000. So dividend, close your eyes and put 2,000 into 0%. Sometimes you can put one additional 0, one less 0. Always check, double check. So out of 17, 2,000 goes, remaining is 15,000. So that 15,000 you have to multiply it with 45%, you are an additional rate taxpayer now. Not 45%, sorry. Dividend rate, additional rate is 39.35%. You see? And when it's added, it is 62863. This is the total income tax liability. Now we are moving on to illustration 2. So you are losing your personal allowance entirely. And test understanding 4. Illustration 4, Salman has the following income. Pension income, savings and dividend. Pension is a non-saving, okay? Now you have to allocate it in the most beneficial order. So here what we are going to do is, even test understanding 5 is the same question, similar question. Allocating is about allocation of personal allowance to the different sources in the most beneficial order. So we are going to change the order and see the impact under both test understanding 5 and illustration 2. Question is same, only figures are changed. So it's going to be pretty easy for me to do this. Just put the number here. Okay. So if you add up this 3, it makes sense personal allowance will not be deducted. And here also if you add up this 3, it shows that it will be less than 100,000 only. So it's not about deduction of personal allowance, rather it's about allocation of personal allowance. Okay, here the question is different. Now let's do that quickly. So first we'll do for illustration 2. Okay, I'm not going to put change this figure because it will take time. I'm just immediately going to put number and show you the workings. That's it. So 7570, saving is 5,000 and dividend is 13,000, and everything is done automatically. It is added 25,570. It's the basic rate. So you will get the entire personal allowance. But if you see here, something is different. Personal allowance is 12,570, but your total income from non-saving itself is less than that. So you can go, first we'll go in the normal order, non-saving, saving and dividend. Okay, so first we'll deduct from here. We can only deduct up to 7570 only. So bracket 7570 of personal allowance. Okay, now we'll do two things. First we'll deduct from dividend and see the impact, then we'll deduct from savings and see the impact. Okay, so first dividend. Okay, so what is your personal allowance? 12,570. Out of 12,570, 7,570 has been deducted. Balance is 5,000. That balance 5,000 will deduct from dividend. So minus 5,000. Okay, and we'll write here the sum function. So if you see here, total will be this one only, but part of it is under non-savings and dividend. Now we'll see what's happening. So we'll put sum function to calculate our taxable income. That is this, enter. And I'm going to drag it to the other cell. See, you have to have that plus sign, okay, next to that cell. Otherwise you cannot drag it. If it's like this, not this one, you cannot do that. It has to be this plus sign to drag it. So if you see here, taxable income is 13,000 only. What's happening here? Non-saving is 0. So here we are getting two advantages. This first 5,000 will be taxed at 0%. Starting savings rate you are getting here, because first 5,000 falls under saving only. So here, don't worry about these names. It's fine. I'm just focus on the calculation here. So this, we are going to put it into 0%. We are also getting 1,000 nil rate also, because it's a basic rate. Look at here. So here equal to 1,000 into 0%. So 5,000 goes I'm sorry, 1000 goes to 1000, no need of 1000 because first 5000 went. And next is dividend. So dividend is 8000. Out of 8000, 2000, 0%. Dividend nil rate band. And balance 6000, basic rate of dividend, okay? Which is 8.75%. So just put the sum function here, add this 3 and enter. It's 525. This is the total. Okay. Now we'll compare this if we would have deducted a personal allowance from savings first and then dividend. Okay. So we'll see the impact. Non-saving 7570, that will remain same. But 5000 now, instead of here, we are going to deduct from savings here. Automatically everything changes. Now we'll calculate tax. So this is 0, 0, 0. Out of this 13, 2000 is at 0%. Okay. And here balance 11,000 will be at basic rate. So it's 96.25, this one. So what happened? Before it was 525. Now it is 962. It increased. So which one was most efficient? Deducting from dividend first, not savings. Because when you're deducting from saving, you are losing the savings nil rate band as well as the starting rate. Okay. Now we'll do test your understanding 5. This we can do quickly because it is very similar. So we'll change the figure here. It is 6,800. This one is 4,200. And this one is 12,000. Enter. So total income we are getting. Now, what about personal allowance? Here personal allowance up to 6,800 only you can deduct. So out of 12,570, we'll do a small calculation here. 6,800 goes because we want the balance. See, you can use a calculator here also, okay? This calculator is here. If you want to know the balance, rather than showing each and every working in Excel and making it very confusing for the examiner, let's say, go down like this, 12,570. The small calculation you can use calculator. Okay. 6,800. Enter. So 570. That's the same thing I've got here. That's why I've used this Excel to do the calculation for me. So this first will reduce the entire amount from dividend. So we'll reduce here minus 570 only. So if you check here, now this is the amount. So here it is 0. Saving, see, when you're taxing, it goes in this order, okay? Only personal allowance order will change, but taxing order will remain same. Non-saving, saving and dividend. Non-saving, saving and dividend. Do not forget. So again we are coming here. This is 0. So we'll show 0. Okay. We'll show, in fact, we'll start from here. So this falls in first 5,000. Okay. Oh, wait. Change the figure. So this one will take it in 0% because falls under first 5,000. Okay, and this out 2,000 0%. So balance is how much? 4230, no? 4230. You can use a calculator or you can, it's easy. Then you can just write the number into basic rate 8.75% and sum function. Add all the three, put enter. So it's 370, 1.125. I'm sure you know how to round it up. I've shown it to you previously. Do it like that. So it should be 370. Now we'll check it in the other order. Okay. Or you can just press this undo button also. You see, I keep pressing this undo, undo, undo. So now I will reduce first from saving and then dividend. Second method I'm doing 4,200. I'm going to use my calculator here. Clear 12 5 clear 12 5 70 minus 6,800 minus 4,200 and still 1,570 is remaining, so I will reduce that to 10,430. Now first 2,000 at 0%. Okay, then this one equal to 8,430 into basic rate. What is basic rate? 8.75%. In case you forgot the rate, no worries, you can refer the table. Okay, 737. So which one is giving you the most beneficial? The first method, no? When you first deduct it from dividend, which is because it is giving you around 370. So you see, in fact, in most of the cases we have seen deducting from dividend is most beneficial than first deducting from savings. So now we can come to a conclusion because we have done 4 questions. Now let's move on to our next topic, that's taxation on couples. Now we are moving on to taxation of married couples. Each spouse is taxed separately. Same for the civil partner. They are treated the same way as a spouse. There are special rulings for couples. They can allocate income among them. They can switch, they can transfer. Okay, especially we are talking about assets which incurs income from it. Okay, and transfer of unused personal allowance between spouses, which is known as marriage allowance also. Another name for it is marriage allowance, MA. Now, so here married couples, they can transfer income generating asset in such a way in order to reduce their joint income tax liability. That planning is available for married couples only. For jointly owned assets where both husband and wife are having shares, how do we deal with it? Mostly it's on a 50-50 basis unless actual percentage is shown. Okay, or they tell that this is how we want to be taxed based on our actual percentage ownership. Most of the time it will be taxed in 50-50 basis. In your exam, if they don't give you the percentage of the couple, assume it as 50-50. When you tax it, it has to be 50-50 or default position. Otherwise, examiner will tell you the percentages. So everything for jointly owned assets, if it's not held in a 50-50 ratio, spouses can make an election that they want to be taxed on their actual ownership. But for jointly held bank accounts, it's always 50-50 ratio. There you cannot say. For jointly held bank accounts, always 50-50 ratio. Other than that, any other asset generating income, you can elect to HMRC to tax you on your actual ownership. And if the jointly owned asset is a shares in a closed company, remember earlier we went through closed company. Under what condition can you recall? Yes, when we were discussing the conditions for a qualifying loan interest. Closed company was one of it. So if the couple is having shares in a closed company, automatically that income is taxed on the actual ownership. Okay, individual partners of them will be taxed on their actual ownership. Now, marriage allowance. So transfer of personal allowance is marriage allowance only, but it has to be a fixed. Okay, but there are limitations. It's not as you wish. Marriage allowance is provided neither to spouse who is having a higher rate or additional rate. Is available provided neither spouse or civil partner. That means neither of them should be a higher rate or an additional rate taxpayer. Both of them should be at basic rate. Then only you can transfer marriage allowance. Otherwise, no. If even one of them is at different rate, you can't transfer. We'll do questions on it, don't worry. But it will only be beneficial to make the election provided transfer does not fully utilize personal allowance of 12,570. If you are able to utilize personal allowance of 12,570, it is advisable do not transfer to your spouse. You utilize it. In case you are not able to utilize, let's say you are having income less than 12,570. So portion of personal allowance is lost. Then you transfer to your spouse who has higher income than you. Okay. Now, electing for marriage allowance allows the transfer to the other spouse. That means now your personal allowance will be reduced from your spouse to whom you are transferring, and fixed amount of personal allowance. It does not matter how much of your personal allowance is unused, you can only transfer a fixed amount. And for the tax year, this amount is 1,260. No provision for transferring less than this amount. And this will be the effect of the election. If election is made, what happens? The transferring spouses personal allowance is reduced by the fixed amount. That means your personal allowance, if you are transferring, will be reduced by 1,260. And the one who's receiving that, the recipient spouse, his income tax liability will be reduced at the basic rate. That means 1,260 of marriage allowance into 20% of basic rate. That means 252. That means your spouse, the one who's receiving this allowance, marriage allowance, he can reduce his income tax liability up to the maximum of 252 pounds, not more than that. Because fixed amount is 1,260. If you take 20% of it, income tax is 252. Only up to that much you can reduce your income tax liability. Now, you have to note certain things when it comes to MA. The one who is going to transfer has to make this election that they want to transfer. And how relief is given? It is given from the recipient's income tax liability. His income tax liability is reduced, the one who is receiving it. The recipient's own personal allowance is not increased. Remember that. If you are receiving, your personal allowance will not increase. Only your income tax liability will reduce. And maximum benefit is 252. Remember this figure. If the recipient's income tax is less than 252, what do? Tax repayment is not possible. I know the amount becomes negative then, but then tax repayment is not possible. You are not going to receive tax repayment. But the amount which they transfer transferable personal allowance is reduced, remains 1 to 60. So the one who's transferring you that personal allowance, his personal allowance will be reduced by 1 to 60 only. Doesn't matter whether you utilize 252 or less than 252. That's fixed. At best, relief reduces the recipient's income tax liability to nil. It cannot be negative. That means you cannot receive a repayment. In the year of marriage, full allowance is available. So it's not that you have been married in that tax year for 6 months, so only 6 months allowance. No, full allowance will be given. And same like personal allowance in the year of birth or death, full allowance. How is this relief given? By adjusting the tax code under payee. If the individual is not employed. Okay, you can do a self-assessment also if the individual is not employed. Now we'll be doing questions on marriage allowance. So, illustration 3, marriage allowance. It is about two couples who has been married. Algis is employed and earns a salary of 35,070. Okay, it's a non-saving. Tala spends most of her time looking after their children was on Saturday evening annual salary. So her annual salary is 6,000. Other than this, they have no other income. They make an election to transfer the marriage allowance. So you have to calculate income tax liability of both the husband and the wife. So here we are going to do it. I've used it earlier for the 3 types of income. Now I'm going to write the name A for the husband and Thala is the wife. We don't need the total, so just our focus is on employment income. He has 35,070 and she has 6,000. So personal allowance, if you see here, he can deduct the entire 12,570, whereas she can only deduct up to 6,000. Okay, so here the taxable income will be, I'm going to erase this amount. Otherwise, too many number is going to confuse. Okay, so here you see the total income. Now we are going to reduce. This is the taxable income. We are going to find the income tax of them. Because they have elected to transfer, okay, you see, out of 12,570 only 6,000. So he can transfer some to, she can transfer some to him, the husband. But first, you need to calculate income tax liability. It is not from your total income that you deduct. It is from your income tax liability that you start deducting 252. Okay. So we are going to find tax here. Which is at 20%. So this non-saving into 20%. You see 4,500. Now we'll start deducting from here. Minus 252. It's fixed. So just apply the sum function bracket. You see, and his income tax liability is this, and his income tax will be 0. Okay. So now we'll move on to the situations. What happens when unused personal allowance is more or equal or less than 1 to 60? Now, what happens when if one spouse has unused personal allowance greater than 1 to 60? Because we know fixed limit is 1 to 60. But what if it's more? Then maximum tax saving will be 252 only. Whoever is receiving. This is fixed. Provided that the recipient spouse has income tax liability greater than 252. at least he can reduce up to 252 entirely. Okay, but if it is less than 1260 personal allowance, then fixed amount of 1260 must still be transferred. However, if you see, transferring spouse still has to pay some tax. Okay, so the maximum total tax saving for the couple will be whatever is unused personal allowance into the basic rate income tax. That will be the maximum tax saving. So you need to remember this. Now we are going to do a question to understand this better. Test your understanding 6. So you have been given 3 scenarios for Kate and Emily, A, B, and C, and you have to calculate the income tax liability. With an election to transfer marriage allowance to Katie, their only source of income is self-employment, and they both are basic rate taxpayer. Now, so as we have seen A, B, and C, where in A and B, Emily has nil, and C, Emily has some. So let's see the impact of marriage allowance on the income tax liability. So for A, K for Kat, E for Emily. So we are going to put 30,000 here, and because it's nil, so 0, and personal allowance will be 12,570. Entire you can reduce, no personal allowance here. That means the entire personal allowance can be transferred to Katie as marriage allowance. Okay, but remember, marriage allowance will only be deducted when you are calculating your income tax liability, not from your taxable income. Okay, so sum function and deduct this. I'm going to drag it to the other cell because I need it for my part C. Okay, now income tax. So income tax would be this and 20% basic rate, and here just drag it like this. Okay, so here also it would be 0 because it's just 20% of 0. I mean, you don't have to show the percentage, it will be nil only. So now from this income tax 3486, you have to deduct your marriage allowance. How much? It is maximum 1 to 60 multiply by 20%, 252 only. Since you are deducting, put minus. So if you put minus behind a number, if you want to show something as a minus, it will automatically turn it to negative figure. Now you can put the sum function. Enter. And here it will be 0. And the total will be this. So your total income tax liability under A is 3234. And in this case, maximum marriage allowance can be used. Why? Because Emily did not have any income, therefore he did not utilize his personal allowance at all. So full could be utilized by Kate. Now we are moving on to scenario B, where it is 12,850 and nil. So what I need to do is I only need to change this figure 12,850, but you see what happened here? Automatically tax rate and everything changed. It becomes 280 now. So now my taxable income is 280. If you take 20% of it is 56, you see, you cannot reduce 252. You have to reduce it to 56 only now, which becomes 0. So you pay no tax at all. Okay, coming to C. Here, you'll be paying 30,000. he will be having 11,750. Okay, so for this one, this will no longer be 56, it will be 252. Now the change comes for Emily. If you see Emily, 11,750. But personal allowance is 12,750, right? So he did not utilize it. But remember, you can use a calculator here. 12,750. You have to transfer a marriage allowance of how much? 1,260. So deduct that 1 to 60. So, sorry, it's 12,570. I'm sorry. Marriage allowance is 12,570, not 750. 1 to 60. Enter. You see? So out of 11,750, you only have 11,310 to utilize. So that's why I'm going to reduce 11,310. Because in the previous slide, you just saw the last point says if if the unused personal allowance is less than 1,260, then whoever is transferring has to pay some tax. So the tax saving would be unused personal allowance into 20% basic rate. We'll check that later. Okay, that's the rule. Just before, few minutes before we went through the slide, where we told that if the transferee has unused personal allowance and it's more than 1,260, it's fine. Like in part A and B, there were no issue. He could transfer the entire amount. But in C, there are restrictions now because it's having less than 1,260. How much? What's the difference? It would be 12,570 minus 11,750. You see 820. So the difference is 820. We'll put that 820 here. Write it here. Okay. We'll use it later. So 820 is the difference. It's less than 1 to 60, right? But how we got 11,310? Because from 12,570, we deducted 1 to 60 and the remaining 11,310. So we are utilizing this entire amount from this and we are left with 440. Okay. Now we'll see which one is more beneficial. Transferring of marriage allowance or not transferring of marriage allowance. Even the question did not ask you that. Okay. Question says election has been made. But I will show you doing both. Now. So here tax rate there is no issue. But remember, even if it's having less than 1,260, like in part C, right? The difference is 820, right? But this will be same. This to the recipient, he will only receive 252. This is fixed. 10%, 20% of 1,260 only. But from the transferor's account, Emily, he has to pay some tax, which is on this 440. That's the rule says so. Okay. So now when we are taking tax, okay, this is how we are going to calculate. We are going to take this because it's taxable income and take 20% and apply. 88. So if you see with this election, this is the total tax. 3322. But without the election, what would have been the tax? It would have been this much. Only this much. Why? Because then you would have reduced 11,750 from this amount. 11,750. So when you reduce 11,750 from 11,750, this becomes 0, nothing to pay. He is paying the entire amount. Okay, so it will be this only. So this, if you see, it's more than, without election is more than with election. So with election is beneficial. That's why I've kept some amount here. Because when you deduct from 12,750, 1 to 60 separately you have to keep because you are going to transfer it as a marriage allowance. After you deduct 1 to 60, from 12,570, you are left with this amount. So this is the max you can reduce of personal allowance. So if you take the difference, if you want to know the tax saving, it's very easy. It's this minus this 164. There is another way of doing this 164 in a shortcut. Okay, the shortcut is, remember I told you 820 is the difference between this and 12,570, the personal allowance, and this amount. Unused is 820, right? So just take 820 and apply basic rate 20%. You see, this is much quicker. You don't have to go through all this. So wherever in your exam you can use shortcut, because it is going to save a lot of time. Okay, so that's it. Now, to be effective for the tax year 2022-23, elections can be made. Okay, it can be made in two ways: in advance or in arrear. If it's made in advance, election has to be made by 5th of April 2023 that you want to transfer. Okay, and this election will remain in force for future tax years only also, unless you withdraw the election or conditions for relief are no longer met. Conditions for relief no longer met means, let's say one of the spouse becomes a high tax rate payer or additional tax rate payer, it will not be allowable. Relief will not be there because it's only for basic rate taxpayer. Both has to be basic rate taxpayer for marriage allowance to work. In arrear, latest by 5th of April 2027. So if you see, it is 4 years from the end of the tax year. Your tax year this year ends at 5 April 2023. If you take 4 years, 5 of April 2027, that is the latest. But remember, if you do it in arrear, only for tax year 2022-23, your marriage allowance will be applicable. You cannot use it for future, like how you can do it if it was in advance. Okay, only that year. Now, taxation of children. So we are moving from couples to children. In UK, even children are taxed. Okay, so any income a child receives is taxed. So they have a separate income tax computation, and they also get personal allowance the year they are born. And this returns or claims can be completed by the parent also on behalf of the child. Where a child has received taxed income, repayment of tax will probably arise. Now, some income that a children get is through a source that is set up by their parent, which is known as parental disposition. If this happens, what is the impact on the tax? Okay, impact on the tax is that then it is assessed on the parent, not the child. For example, let's say parent has set up a source through which a child is earning income, then that income is taxed on the parent, not the child, because the source is the parent. Unless there are some exemptions, like gross income that is received less than 100 or less in the tax year will be assessed on the child, not the parent. And if the child is under 18 and unmarried, it is on the child, not the parent. Now we'll see what is this parental disposition in detail. So let's say the child is 18 and unmarried, and they have an investment income that is derived from the capital provided by parent. Then who is assessed to tax? Is the parent. This income will be treated like belonging to parent rather than the child. If the parent is still alive, by the way. If they are not alive, then it's on the child. Capital could be provided by, let's say, setting up a formal trust for them, for your children in the future, or you are gifting them a money. Let's say opening a bank account in the child's name or shares. Then is a parental disposition. Now, So before the last section of this lecture is income tax planning scenario before we summarize this lecture. In, this is nothing new. We have covered all. So all that what we have covered, marriage allowance, personal allowance, dividend income, non-savings, savings rate, using all this, now we are going to plan. Okay. But before plan, let us do one more question on our uh, taxation on children. Test your understanding 7. So you have been given some income and allowances, and this is about married couple. So you have been given salary, benefit, allowable expenses, bank interest, balance society interest, interest from ISA account, and Norman and Kate has a son. Metis age is 10. Metis was given 5,000 3.5% guilt on 6th April 2000 as a birthday present by Kate. So you can see this is a married couple plus a son, that means taxation on children, plus various sources of income, plus some exempted income, everything together. On 15th November, Kate and John bought a property that has been left as an unfurnished accommodation. Accessible property was 4,100. So this is the joint property income. Now, you have to calculate Kate's income tax liability. Okay, so it's only about Kate. Now, how do you solve this question and from what when so many things are there? First, normally calculate your 3 types of income the way you do. Okay, under your employment income, first decide under your non-savings what goes. Okay, your salary will go as a non-saving. Then what's next? Benefits as an employment income, non-saving. Then any allowable expenses of employment you need to deduct. So only this 3 goes, rest comes under savings and dividend. Okay, so I'm going to take it here. I have already the table done. Okay, uh, so because it is only for single person, I will change this to non-saving NS, savings S, and dividend and total is already there. So here I will add up the total the non-savings income, which is 41,550 plus 1,875 minus 95. Enter. And when it comes to the savings, bank interest 2,650, building society interest 2,115, and what about interest from ISA account? Should we take it? If you take it, you have to revisit and learn your concept very well. And if you don't take it, that means you have understood very well. Because interest from ISA account is exempt. It is an exempt income. But even if it is exempt, you have to make a note of it that it's exempt. You just cannot ignore it. And in note 1, there is some note given which says 5,000 of guilt interest 3.5%. This you have to take. 3.5% of 5,000 you have to take as guilt interest. It is not an exempt income. So when you are taking here under savings, we'll add bank interest 2,650 plus building society interest 2,115 plus 3.5% of 5,000. How are you taking it? Put a bracket, put 3.5%, multiply by 5,000, close bracket, enter. You see? Why did I put bracket at the end? Because it needs to multiply 3.5 with 5,000 only and then add with the other two. And here you have to make a note. For example, here you have to make a note that there is no, there is interest from ISA is an exempt. So when you're writing, let's say you're writing ISA interest. Okay, so now you have to write here that is exempt. You have to write it like this and leave it blank, but you have to write that line to show that you have understood. Okay, now there is some property income. Okay, you have to read your notes also. With information given, read your other notes and you have to take those figures also. Note 2, it's about property income 4100, but remember they did not give you the proportion, so take divide it by 2. Okay, because 50-50. So then you have to add property income as well. And when you're taking it from any note, make sure that you write that note 2. You're taking it from some note like this. Okay, so divide 4100, half will be to 2050. Okay, so property income, okay, comes under non-saving. Just a bit. So this is unfurnished accommodation. Okay, it's a non-saving, so you have to write it 4100 divided by 2, 2050. Now take your taxable income. This will be your taxable income, TI, or you can write total income. It's total income. Okay, taxable income comes after you deduct personal allowance, and I'm going to remove this of it. Okay, so here sum function. This two. Okay, 50, 320. So now when I'm deducting my personal allowance, I'm going to deduct it from here. PA minus 12,570. It will come in the total also. And this will become taxable income. Just apply the sum function. From total income, deduct this 4940 and sum function. Either take it vertical or horizontal, does not matter. Should give you the same answer. Okay. Now comes the tax. Right? So now first 32,810. Okay, straight away take 20% on it. So here you take this and apply 20%, 6562. Okay, and if you see this, it is 37,750. Right, slightly little of its income are in the higher, so it's a higher income. So that means the savings nil rate band that you will get will be 500, but you are not going to get the 5,000 starting rate of savings. Okay, so that will be 500 into 0%. Done. Now the balance of the saving. So it will be this minus 500 because you have taken 500 for 0% out of savings. Put bracket, close bracket, multiply by 40%. I'm sorry, 40%. Okay, oh, sorry, I made a mistake. You have to take the first 37,700 up to 37,700 at basic rate, right? So that was the mistake I did. So it would be 37,700 minus, let me put a bracket, minus this and minus 500 into 20%. Enter. So now how much is left? If you see this figure, 37,700 is basic, so only 50 is extra. So 50 into 40%, 20. Now take the sum function and add all. Enter. 7,460. This is the income tax liability. So now we are moving on to income tax planning scenarios. Let's maximize the use of allowances. Wherever you have allowances, maximize it. Okay. Personal allowance, yes, and also try to maximize the nil rate band as fully as possible. For example, if you are not having non-savings, make sure you increase your non-savings income so that you can utilize your personal allowance against that fully. Okay. And if there are savings and dividend, make sure that you try to put them at 0% tax rate. For example, if you're having 6,000 of savings, first 6,000, 5,000 will go starting rate, 1,000 nil rate band if you're a basic rate taxpayer. And dividend, obviously, first 2,000 0%, and the balance you have to pay at basic rate. So how can you do this? We know the rate, but action, withdraw more from a pension scheme or generate more earned income or property income. If you try to increase your pension or property income, you can utilize your personal allowance against it, and also you are going to get the nil rate band from savings and dividend. That's how you can increase your non-savings. Next, savings and dividend nil rate band take advantage by having significant investment income. Then, let's say shareholders of an owner managed business, okay? They may wish to extract 2,000 profit as a dividend, okay? It is always beneficial to extract the profit as a dividend rather than as a salary. Why? Because you can take advantage of dividend nil rate band of that 2,000. It will be taxed as 0%. If you take that 2,000 as a salary, you have to pay income tax on that. Okay. Not only to income tax, it will be subject to national insurance as well. National insurance we have not covered in ATX yet, but we'll be covering it soon. So you have to pay that as well above the income tax. Now, for married couples and civil partners, there are certain planning scenarios only applicable for them. For individual taxpayers, you cannot give them this advice. So in your question, make sure whether they are married couple or not to whom you are advising this. Okay. For example, equalizing income and maximizing use of nil rate band for both, using tax-free investment like investing in ISA, maximizing pension contribution, equalization of income. Okay. Couples can transfer the income generating asset between them at no tax cost so that they can minimize their joint tax liability. Okay. And make sure both of the individuals utilize their personal allowance and nil rate band and all. So starting rate band also. So personal allowance, starting rate band, savings and dividend nil rate band. Make sure both of them utilize this fully. And the basic rate band. Now, let's say if one of the couple is a basic rate taxpayer and other could be higher additional, okay, couple, then they should aim to utilize the basic rate taxpayer savings income nil rate band. Try to utilize that because they are going to have 1,000. That's the bigger one. whereas additional higher is going to have 500 and additional is nil. So if you're an additional rate taxpayer, nothing to utilize. You cannot utilize it. Anyway, you're not getting the savings income nil rate band. It's nil. But if you're a basic, try to utilize it. Higher also, somewhat you can utilize it because at least 500. Next, the dividend nil rate band is 2000, regardless of the amount of income. Okay, it will be 2000 no matter whatever the income. So, if a couple has dividend income more than 2000, then taxpayer can transfer some of the shares to the couple who is not utilizing that dividend nil rate band. You understand what I mean? Let's say you have 5000. 2000 you paid nil rate. Out of that 2000, 3000 extra you have. Give it to your spouse who does not have any dividend. Or let's say even she has some dividend, still pay it. You have to pay 0%. So together when you combine, tax will be less. Okay. And in marriage allowance, you are transferring a fixed amount of personal allowance. That is anyway there. We have done questions on this. And it is important to recognize, okay, that the transfer of interest in the asset to the spouse must be a genuine gift so that it becomes effective for income tax purpose. Immediately, there are no capital gain tax and inheritance tax implication if you are transferring an asset to your spouse. Because you know when you transfer capital type of asset, there are CGT implications. On inheritance also, if it is inherited from your parent or your wife or husband or something like that. But immediate there are no implications. So now let's do questions before we summarize this lecture. We have finished this lecture. Illustration 4, equalization of income. So Kyrie and Spence are married couple. They have earned income of 2000 and 46,500. They owned a joint property, 80% for Spence, 20 for Kyrie, and annual income from the property is 20,000. In addition, they have a joint investment bank account with a cash balance of 35,000 that earns interest of 800. Okay, gross per annum. Now you need to calculate taxable income for both Kyrie and Spend and advise them. There is an and. Whenever it's an additional requirement. You first have to calculate, that's one word, and then advise of any income tax planning measure that can reduce their liabilities for the future. Sometimes you can be given in sentences also like this rather than giving in a table form in a number. Okay, so we'll put it in this table K and S. So this is K and this is S. Okay, now first is earned income. So earned income, investment income, all are non-savings only, and property income. 2080. Okay, Spencer 80. What is the Spencer 80, Kyrie 20. So it is 20-80 ratio. And then comes total income. And you deduct your personal allowance. Okay. And then comes your taxable income, TI. So let's put 2000, 46,500. and 400 and 400. If you see investment income, let's see investment income. Here you see they have earned interest. So it's an investment income. Okay, so from an investment bank account they are earning interest 800, so you have to divide equally between two, because joint investment bank account is always divided in 50-50 ratio. So 800 divided by 2, 400, 400 you have to take. And then comes property income. How do you divide the property income? Income is 20,000. So 20,000 of 20% will be 4,000 and 80% will be 16,000. So 4,000 and 16,000. Now total income, sum function. And I'm going to, this plus sign should come, drag it to the other side. Okay, so personal allowance, you see here it will be restricted to 6,400 only. Balance, I'll be deducting it from, no, for him the entire amount will come, because you're not electing to transfer anything, and you cannot elect also, because if you're writing marriage allowance, be very careful, you can't do that, because if you see here, Spence is a higher income taxpayer, he's not a basically taxpayer, so he can't. Earned income itself is 46,500. If you add up, it will be more than, definitely more than the basic rate. So can't opt for marriage allowance. But are all deductions you can deduct, like personal allowance and all. So if you calculate taxable income, again is the sum of this two. I'm going to this and take it here. So 50, 150. This is 12,570. I always write 750. My mistake. So calculation part is done. Okay, this is taxable income. And when you are taking tax, how do you do that? It is simply you take this minus 37,700 to be taxed at 40%. Okay, this will be taxed at 40%. And I'll copy paste it in this cell. You see what's happening? Because when you're copy pasting this, see, you cannot see all the option. Just make it a little bigger. You should be able to see all the option. Paste special, paste just a value. Okay. So here I'm going to deduct and 37,700 into 20%. Now you have to add both the tax. 12,592 is the total amount of tax that you have to pay. Okay, that Spence has to pay. Wait a minute, there is some mistake. Yes, the mistake took place. You know why? Because we have not put it under separate heading savings, non-savings. You have to do that. Because if you see here, investment income, this one, there are some interest which has to go under savings income. Okay, so because it is a higher rate, we are going to get 500 of savings nil rate band. Okay, So if you take from the total balance, this is the issue that you are also going to face. Okay. So for example, here when you are taking uh, you have to take that 500. Okay. So if you see here, okay, rather than showing here, I will show you here itself. You see, savings income is only 400. So he does not have to pay any tax on that 400 because of 500 savings nil rate band. So it is taxed as 0%. Okay. Now, marriage allowance. So when you are advising them, advise this, that marriage allowance cannot be used because Spence is a high rate taxpayer and he will not pay tax on investment because of 500 savings nil rate band. All these things you have to write. And because he is already giving savings nil rate band, no use of transferring income to Kate. Okay. Rather, tax planning should be uh, you can transfer a large percentage ownership of the property to Kyria, that you can do because Kyria is currently having 20%, whereas Spence is having 80%. You can change that ownership or payment into a pension. That could be done because he didn't utilize his personal allowance, only 6,400. If he wants to utilize it more, increase the non-saving by putting in pension. Now, so that is the advice you have given. Okay, what is the effect of this? See, this effect you can write under word processor. When you have to type anything, advice and anything, use this. So I'll go down. We have test understanding 8 also to do after this. That is the last question for this lecture. After this, we are going to summarize. We'll keep some space and let's write effect of this. So I'm going to introduce it in bullet points. What could be the first effect of this? Tell me. Let's say you are changing the percentage. What happens? If you are transferring a larger percentage of property to Kyria, Spence could save tax at 40%. Currently, he's paying tax at 40%, right? Some of the income. He could save that by transferring some of the income to Kyria. If he cannot transfer the income, he can transfer that soul. That means the percentage of holding that asset, he can change it. That means higher income will go to now Kyria than Spence. And Spence does not have to pay the 40%. He can save there. So saving, I'm just writing in short form, 40% tax, but in your answer, you have to write full in your exam. This is for your explanation. Saving 40% tax of S, okay, Spence, and Kyria, I'm just putting it in bracket, utilizing full personal allowance. He can utilize the full personal allowance, right? And also the 20% basic rate can also be utilized. What is the next effect? Because currently basic rate tax ban is not utilized. That Kyria can utilize. Even with extra property income, remember Kyria would still remain a basic rate taxpayer only because his income is very less. Okay, what is that property income? We'll go to that property income. You see, 4,000, so 16,000. Let's change. Okay, so currently he's having a total income of 6,400. If you add 16,000 also to this, still he remains a basic rate taxpayer only. Okay, so that you can write in the second point. And also, because he's a basic rate taxpayer, savings income of 400. The savings income of 400 he can utilize the nil rate band of 1000. Entirely it will go. Okay. And also possibly he might even get the 5000 also. 5000 starting rate band. If the non-saving for Kyria is below 5000. That you can write in the second point. I'm not writing it. It will take a lot of time. Already we have exceeded this lecture by more than 3 hours. I just want to summarize it in few minutes. And the third point. What about pension contribution? In Spain's case, okay, let's say Spain for Spence. If he does any pension contributions which can provide tax relief at 40%, he can extend his basic rate band. Because remember, any contributions, okay, personal pension contribution helps you to extend your basic rate and higher rate band. I've covered this in, I think, previously in this lecture itself when we were going through the notes, Proforma of the income tax computation. There I told. To utilize basic rate band, there are two things. One is gifted donation, not been tested in ATX, but the other one is personal pension contribution. That will be tested in ATX, of course. So that you can write. Test your understanding 8. So here you have been given employment income, savings income, and dividend income for Stan and G. And you don't have to calculate but have to advise of the tax planning. So you can use the word for it. Okay. See, when you're giving tax planning measure, how do you get professional marks as well as technical marks? Divide answer into paragraphs. How many paragraphs? Depending on the case. In this case, you can write this answer into paragraphs. One for Stain separately, one for G. So separately we are going to give them advice. Okay. So first here we are going to write Stain. Okay. I'm going to make sure that I'm going to remove the bold because it's an answer. And the next paragraph leave some right and write for G. So two separate paragraphs. Okay. So understand. Look at Stain. Looking at 170 more than 150. Employment income itself is more than 150. So if you add up the rest, definitely it is an additional red taxpayer. So you have to mention that in your answer first. Depending on their tax position, you have to advise. So Stan is an additional rate taxpayer. This is your starting point. Come to GM. G 20,000, 3,000 basic rate. Okay. Jessica sir. Basic rate taxpayer. If you want to write simultaneously like this, keep some space and write like this itself. You see, this also helps. But if you just want to finish one and then want to write the next one, that's also fine. So because his additional rate, then what? Place the limitations. This is, I'm writing an answer now. Okay. Number one, what did he lose? Because it's additional. Immediately go to savings. He will lose the savings nil rate band. Yes, so write it. So he is not entitled to a, I'm going to use initials, savings income nil rate band. Okay, it's not entitled to savings income nil rate band. So first we'll finish with Stain and then we'll go to G. Otherwise it becomes very confusing, right? So if you see, already employment income is 170, more than 150. So definitely all is savings income. Dividend we don't have to write because it is 0. All is savings income of 2000 will be taxed at 45%. That's what we have to write. Even though the word is advice, here and there little bit calculations you have to do, okay? So his savings, you have to write it in sentences like this, not in bullet points. His savings will be, or you can write savings income will be subject to 45% income. See, you try to shorten your sentence. Don't write too long sentences. It's going to waste a lot of time, okay? 45% income tax, enough. So if you see, J is a basic rate taxpayer, okay? 20,000. Savings income is nil. So he doesn't even have a savings income. So what does it mean? He's not utilizing his savings nil rate bet, but he is applicable to savings nil rate bet of 1,000. But he's not utilizing because it's 0. Okay? So he's a basic rate taxpayer and is not utilizing her. Make sure that you put the symbol, the pounds and all, her 1,000 savings nil rate ban. In order to save time, I'm not using all those symbols, okay? She's not used. So what should you suggest? Transfer. Yes, because J is not, so you can transfer, right? So Stein should transfer his savings to G. Who should transfer to whom? The one who is having the additional rate. He should transfer, not the basic rate. Because whose tax we have to reduce? Stein's. If he pays to G, because you have not utilized that 1,000, he can now utilize. But if it's the other way around, your marks is going to suffer in your exam. Be very, very careful whom you are giving advice and transfer to whom. Who is receiving, who has to pay. It is Stein, the additional taxpayer, who has to transfer to the low income rate, not the other way around. Otherwise, he's going to pay additional tax. There is not any efficient tax planning, right? It becomes inefficient tax planning. Okay, so don't be in that position. So you have to write here. Stein should transfer. So you are advising. So you can say they must do that, they should do this. You can use these words, okay? Should transfer his. We are not saying transfer everything or non-savings, only savings. Non-savings does not matter, it remains in whose hand. There is no any nil rate bay and starting date bay, nothing like that. Only savings and dividend we are worried about. So your planning also should be in the savings and dividend only. No planning in non-savings. Stein should transfer his savings to G. Okay. This is very general. Transfer his savings to G. How much? What amount? You have to write. Because how much you can save also you have to write. It's a tax planning, no? 1,000. Okay. So if he has to transfer savings of 1,000 and this would be taxed, you have to write also. It would be taxed at 0%. You have to write it, which is the nil rate band. And what about the remaining 1,000? Because he is having 2,000, no? If he's transferring savings income, entire 2,000 goes to G. Out of that 1,000, okay, 0%. What about the remaining 1,000? Still, it's better to transfer the entire 2,000. Why? Because he will be taxed at basic rate, whereas Stein is is being taxed at 45%. So it's better to be taxed at 20% or 45%? 20%. So transfer. So that you have to write. So you have to write about the remaining also. Okay. And the remaining 1,000 would be taxed at 20%. You have to be super fast in typing, okay? Make sure when you're practicing questions, you develop that skills also. Every day you type something, some answer you type. Calculation, you have to be fast in Excel as well as typing also. which is the basic rate. Okay. So basically, when you're giving tax planning, make sure that you write how much tax you are saving. Saving tax of how much? Here you have to do calculation. So how much tax you are saving? It's like this. See, out of this 2000, okay, let's say 1000 you give to G, okay, 1000 will be taxed at 0%. But if that 1000 remains with 10, the remaining 1000, it would have been taxed at 45%. So 1000 into 45%, right? Put this in bracket. Minus how much? Now if you give it to G, it would have been taxed at 20%. So 1000 into 20%. How much you are saving? I'm sorry, there is a mistake. I'm sorry. This should be an addition. Okay. And so we are talking about the remaining 1000. Okay. So that 1000 would have taxed at 45%, right? But now it is taxed at 20%. The difference between 45 and 20%. You have to give the difference like this. Okay. It's taking a little bit time, but this time is worth it. Trust me, guys. So the difference between 45 and 20. Earlier it was at 45%. Now it will be taxed at 20%. We are not talking about the one which went in the nil rate. We are talking about that 1000 which would be taxed at the basic rate now. So the difference would be 25%. So if you are taking 25% of 1000, it would be 250. That 250 you are adding with 450 because 45% of 1000, which adds up to 700. This is how you calculate tax saving. How? Because earlier tax rate was 45%. It would have been taxed at 45. Now the change. So the tax saving will be 700. There is another way of doing it. If you're not understanding, if this is not making sense to you, take 45% on this 2000. Let's do this through a calculator. 45% of 2000. Earlier it was taxed at this rate, 900, correct? Now only 1000 would be taxed at 20%. This is easier, I feel. Sorry, I'm sorry. Clear. 1000, because 1000 goes in the nil rate, we are not talking about it. We are talking about the one which is taxed at the basic rate at 20. So 200. So 900 minus 200 is 700. That is easier, I feel. Okay, this is given in the textbook. that you first take 1000. Okay, how they are taking that savings nil rate band is like this. I will show you why it is 1000 into 45%. It's little confusing, I know. uh, we'll go to that question itself. See here, out of this 2000, okay, 1000 you are transferring to G. So that 1000 is a saving or not? The one which you are transferring to G, it is a saving. 1000, the saving is the nil rate. Okay, so this 1000 into 45% is about the nil rate, because earlier you have to pay 45% on that 1000. Out of the 2000, on 1000 you have to pay 45%. Both you have to pay 45, but we are talking about the nil rate band. Now because it is under the nil rate band, no tax at all. So entire 45% on 1000 you are saving, which is now under nil rate band after transfer. So that is there. Then the next is next 1000 you are saving because of basic rate. So from higher, sorry, additional to basic rate. That's why the difference 45 to 20 into 1000. So that's why this 2000, 1000 separately, the other 1000 separately are made up like that. So you add both and you get the total tax saving. I'm sure, I'm assuming that you have able to understand this and picturize it, right? Visualize it. If you do it like this also, it would be same. This is the entire 45% you are saving, not the balance, because savings nil rate is 0%. That's why we are not showing that difference like how we are showing when we move from additional to basic. This is totally from additional to zero only. So when it goes from additional to zero, we don't show the difference. We just write the amount 1000 into that additional rate that you are saving. Earlier you had to pay, now you are saving that tax. If you're transferred to G, that's why we are adding. Now, what about G? So for stain we are over. We have given him the advice. Here for G we can talk about dividend also. So he can utilize his dividend nil rate band of 2000, right? He has fully utilized it. And anything of excess of that, that means 1000 will be taxed at 8.75%. So all that you have to write. And so because she has 1000, 2000 will go in the nil rate band. So remaining 1000, now he can transfer to Stain, because Stain has not utilized his dividend nil rate band. So if he gives 1000 goes from here to here, let's say now he's having 1000. I'm sorry. Okay, let's say now from 3000 he's having 1000. So he can utilize this 1000 through his dividend nil rate band of 2000. That means it will be 0%. That means G will be paying 0% tax on dividend. No dividend. 2000 goes by dividend nil rate, 1000 transferred to Stain, nothing. Right? So how much tax you are saving? See, the tax that you have to pay, that tax only you are saving. Calculate how much tax you have to pay. After dividend nil rate band, dividend is 1000. Okay, on that, basic rate is 8.75%. So this much you are saving if you transfer to Stain, which is 88. This much you are saving. So that's it. Now let's summarize this lecture. I know it's a very long lecture. You must have been tired by now. Um, so relax and then come back once you are done. So tax here we are using for ATX and taxation is the Financial Act 2022 starting from 6th April 2022 to 5th April 2023. Taxable income, we went through all the types of taxable income. You have to include it in your table, and income has to be in gross. You have to separate it into 3 separate headings: non-saving, savings and dividend, and deduct all the kind of relief from your total income. Once you add your non-saving saving dividend, it is known as total income. Deduct personal allowance, deduct any kind of reliefs, loss reliefs, or anything like that. Okay, after deducting relief, in fact, you deduct your personal allowance. Then, once you're deducting personal allowance, it has to be in the most beneficial order. You have to see whether deducting from savings is beneficial or dividend first. We have done questions on that, right? Exempt income, do not include them, like income from individual savings account, NSI saving certificate interest, interest on repayment of tax, winnings, state benefit, scholarship benefit, lottery. All these are exempt income. You do not tax, but you have to write exempt income. Allowable deductions. There are three main allowable deductions. First one is qualifying loan interest, which you can deduct from your total income. Under that, we went through four conditions. Okay, before going to four conditions, remember all of them are paid gross. Okay, here maximum deduction applies, maximum that you can deduct. Okay, so qualifying loan, we'll talk about maximum deduction a little bit later. First, we'll go through that. Qualifying loan, if you take a loan to contribute to a partnership, it's a qualifying loan. Okay, especially if it's in a closed company and all situated in UK or EEA. If you want to buy shares in a employee control company, same, situated in UK or EEA, qualifying loan. And if you are taking a loan to pay inheritance tax on a state, qualifying loan. Now, I told you maximum deduction. This is this maximum deduction. So the maximum deduction should be greater of 50,000 or 25% of ATI, adjusted trading income. Once we do a self-employment income, you will understand the adjusted trading income better. We still didn't go there on our taxation. Once we go there, you will understand this better, this rule. It's there in your exam sheet also. So that means the lowest that you can deduct is minimum is 50,000. Beyond this, it will not fall. That's the minimum that your deduction could fall down to. It will not fall below 50,000. At least you are sure up to 50,000 you can deduct. 50,000 or above 50,000. Okay. Loss relief. Yes, we have loss relief, which we have not covered yet. We'll be covering it soon. Royalties. Royalties are deducted. Okay. They are deducted from trading income on accrual basis. Copyright royalties are paid gross and patent royalties are paid net of basic rate tax, but it is not going to be asked in ATX, so I have not included it here. Third deduction is personal allowance. It is 12,570 for this year. If it's unused, it's lost because you cannot use it against capital gain, nor you can transfer it to someone else. Nor you can transfer it from next year to the previous year or previous year to next year. It is not transferred yearly. Okay, you have to use it in that year itself. But you can transfer some or entire amount of it to your spouse. And you have to allocate personal allowance to different income, that is saving, non-saving, dividend, in most beneficial order. Now when we have done question, we have seen most beneficial is first dividend, then savings, because savings have starting rate and nil rate band, whereas dividend, irrespective of your income level, 2000 at 0%. But what if you withdraw personal allowance? You can withdraw this personal allowance at any age. Okay, you can reduce it. Personal allowance reduces also. If your ANI is greater than 100,000, ANI is adjusted net income. Okay, adjusted net income is your net income minus any of your personal pension contribution or your gross gift aid. Gross if gift aid will not be asked in ATS, don't worry, but personal pension contribution will be asked. So if it's there, deducting from net income. I know this is too much to remember, but as you practice with questions, try to reduce personal allowance, do questions on personal allowance. You will see a pattern and it's very easy. Trust me, ATX is highly scoring paper. And guess what? Me being a prize winner of ATX, I can assure you that ATX is a very fun subject, provided you are very strong with your tax rules. You know where to apply what rules. It is only just knowing the rules, that's it. It is not like your audit or your performance management where you have to think too much. It's like you know it. You never forget. ATX is very hard that once you remember, you don't forget usually. It's very, you automatically will remember. And also the figure, the table, tax rate, allowable deduction, everything is given there. So even if you don't memorize also is fine. But you should know how to use it. Okay. And since you have been doing this through your taxation, once you come to ATX, it's not a very difficult thing to do. Except additional things in ATX, which will take a little time for you because that needs practice. This you have covered in taxation, so it's not a big deal. Now, from your ANI, this is the formula. Once you calculate your adjusted net income minus 100,000, whatever amount, take 50% and reduce your personal allowance by that amount. Once your adjusted net income reaches 125,140, personal allowance is nil. It cannot be negative, it's nil. Anything above 125,140, nil. Less than this, some personal allowance you can claim. Marriage allowance. This is the transfer of your personal allowance only. Okay. This can be utilized if one spouse has not utilized their personal allowance, other spouse is the basic rate taxpayer, but only fixed amount 1 to 60. That means maximum tax you can save is 1 to 16 to 20%, 252. You can elect for 2022-23 by 5th of April 2023 or by 5th of April 2027. If it is by 5th of April 2023, forever you can apply, forever you can transfer. It's for future, unless some changes are there. Unless conditions no longer apply or you withdraw. Conditions no longer apply means basic rate becomes higher rate taxpayer or additional rate taxpayer. Then you cannot transfer. By 5th of April 2027, if you make the election to transfer, it is only effective for 2022-23 year, only that single year. Taxation on couple, separately. Joint income 50-50 unless they tell you the actual split. But for bank interest, always 50-50. And unless income from closed company shares. Closed company shares also 50-50. I'm sorry, closed company shares actual ownership, okay? Otherwise, most of it are 50. If they don't give any percentage, take it as 50-50, default position, okay, on your exam. Any unused personal allowance, transfer. And when you're giving tax planning advice, no, on a couple, see their different tax rate and see their asset ownership. Who is having more, who is having less, who is having what tax rate, and accordingly you can shift. Because your job is to reduce the overall combined. When you add up both the tax of the couple, the combined tax should be lower. Okay, we have done questions on that also. Taxation of children, if they are under 18 and unmarried, if the income source is set up by the parent, parent will be taxed. And if the gross income in the tax year is 100 or less, children will be taxed. So that's it for this lecture 1 of ATX. I know it's very big, okay, but there is no choice. I couldn't make it any shorter, but definitely in my revision series I will try to make it short and include all the important points only. Now it's your job. Pick out questions on income tax and do a question today itself from your revision kit. Best of luck, and don't forget to subscribe to my channel if you haven't, and Simultaneously, I'm doing taxation also, so you can watch those lectures. If you want any help for ATX, always go back to taxation and refer. I'm simultaneously doing both for September 2023. Best of luck and you take care.